Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys. Good morning. Welcome back to another stream. Hope you're doing well. Let me adjust I want to make sure I'm in the middle of my camera today. Yesterday, that was bugging me. Okay. I think we're good. All right. Hope everybody's doing well. Can you guys just confirm really quick that you can hear me okay? Oh, hold on. Audio. Yep, I'm plugged into the right mic. I just wanted to make sure that my microphone sounds okay. I am still streaming from home. The East Coast, or the Southeast specifically in the United States, is getting hit by a hurricane right now. So weather is kind of awful out there. So we are working from home today. Hopefully I don't lose internet suddenly during the stream. But we've got a big day today, so we're going to be taking a look at some charts. We're going to take a look at some markets. Also, I think the lighting in here is a little better than yesterday. If you were watching the stream yesterday, also forgive my horrible hair today. I mentioned that there's a hurricane in our area. Well, this morning we had a big, water kind of surge come through the base of our floors, which kind of stunk. But we are, yeah. Chandler, you got that too? Flooded in. Yeah, I had a little. Well, I don't know if you got the same thing as I did, but I had a little bit of flooding come through our apartment, which. I was on all fours cleaning up this morning before the stream. So forgive my my rough appearance. We're going to be pushing through it today and hopefully no floods. Again, if my camera just shuts off, it's because I got, covered in water and I'm currently underwater. So if that happens, then you know what happened to me. I hope everyone's doing well. We're going to be taking a look at some charts here as we count down to Forex Factory, pull it up. Core PCE numbers this morning, which have definitely the potential to make some market moves, some ripple effects. This is a reading in inflation. I want to explain something about inflation here this morning. So let's just pull up the dollar for a second. So if we're talking about inflation, let's just say inflation in general, okay? So the current environment, right? Current environment is that inflation is coming down, okay? And let's just say that our target, we're getting pretty close to our target, okay? This blue line is our target of about 2% annual inflation. That's what the Fed wants to see. Why do they want 2%? Why not 0%? Why don't they want to see prices go down? Well, because prices going down are usually in response. I'm double checking that there's not water leaking into my, my cat is staring at the floor. So I'm like, please don't be staring at water. Anyways, so why do they want 2% inflation? Well, 2% inflation signals that there is growth in the economy. Because if you have 0% inflation or negative inflation, deflation, what that tells you is that nobody's going out and buying anything. Like the economy is completely at a standstill, which is extremely negative. So we don't want that, right? We don't want incredibly negative inflation. We don't want incredibly high inflation. We want somewhere in the middle, or 2%. So that's why the Fed targets 2%. How do they do that? How do they target inflation? Well, they raise and lower the cost of borrowing money, or interest rates. And so we've had a period of higher than usual interest rates, or higher than, the last 2 decades or so. And now we're seeing inflation coming down. So the Fed is cutting rates. They cut rates last week. And yeah, so we're seeing Fed rate cuts begin to sort of combat that. Now, what you don't want to see, however, is the Fed begin to cut rates, and what worst case scenario happens, inflation actually bottoms out and starts going up again. Now, is this possible? Yes. But is it likely right now? No. So when we know that the unlikely scenario is a rise in inflation, The market, what that tells you is the market doesn't expect that to happen and is positioned for inflation currently to do what? The market expects inflation to come nicely down and sit around 2%. So if inflation does this today, meaning if we see more evidence of inflation just normalizing to 2%, the market already expected that. So likely what would happen is not a whole lot, right? Because that's what the market currently expects. You always have to be thinking, what is the market thinking and expecting right now? And what could surprise the market? Well, today, what could surprise the market, not something I'm forecasting, but could be worth noting, is a uptick in inflation could disrupt the good vibes story that we've had the last few months, meaning stocks go higher and et cetera. If you get a disruption to that story, meaning inflation does not come in line or does not cool off further, then you might have a little bit of a mini panic in the market. So when I talk about inflation, sorry, let me fix my camera. Hold on. I swear I'm hearing like dripping, but I don't see any water. We're good for now. So when we talk about inflation, come on, camera, what's going on? I'm blurry, but I was not blurry a second ago. Hold on. There you go, kind of. Now I'll just have to stay back here. So if we get inflation surprising us in a negative way, then the market's going to have a big movement. So don't expect a big movement if we get inflation coming down further from here. I don't think that's going to really do much to the markets. If, however, you get a surprise, stocks would probably come down, bonds would come down, gold and silver would also come down because higher inflation would lead the Fed to not cut rates as much. So that's what's on the table here today. We're watching inflation. What would go up in that environment? If you get a resurgence in inflation, which is unlikely, but worth discussing in case it does happen, the dollar would go up, right? Like in 2022, when the dollar went straight up for like a whole year because inflation kept going up and up and up. Excuse me. So that's the point that I want to talk about. So with just a few minutes to go, with the PCE number coming out, what can we expect? Well, we are currently forecasting. Let's see what we've got here. We're forecasting for the month over month. In fact, what I'm going to do is I'm going to go ahead and pull up FX Street. Sorry, guys. I ate breakfast right before this, so I'm still, yeah. Okay, so let's go to economic calendar and let's just pull up what we've got coming. By the way, there's 458 people here watching between Twitter and YouTube. If you're enjoying the show, these are totally free. I do them every single day. I'm pretty much on camera every day of the week, just about. And if you enjoy the content that we're putting out, do me a big favor, hit the thumbs up button on the stream, subscribe if you're new, all the YouTube stuff. If you're on Twitter, make sure to follow wherever you're watching from. I appreciate it a lot. Thank you so much. Okay, so I'm going to do this really quick. We're going to go to, let's make sure we're on the right time zone. So we're going to go Eastern Standard Time. So we've got PCE. We're looking for core PCE, personal consumption expenditures, year over year. So this is the number we're watching. Okay. So we're expecting 2.7. So if we get 2.7 or 2.6, it's kind of business as usual. Meaning, what has business been up to recently? Well, gold up, silver up, stocks up, bonds up on falling inflation. So that's what we're looking for, right? We're looking for that number. But what disrupts that? What disrupts that would be a higher than expected reading, meaning if we got like 2.8 or 2.9, if you got a surprise to the upside in inflation, it probably slows expectations for rate cuts. Remember, rate cuts spur the economy. They weaken the dollar. It's good for gold, good for stocks, good for bonds. All right. If you get a disruption to the course of action there, meaning inflation is strong or high, that could be not as great situation. Now, one thing helping the inflation story recently has been the big drop off in oil prices. Remember, inflation can be, I don't know if this is the right vocab word, exonerated. I don't think that's right. Expedited. I'm grasping for something here. Somebody give me a word. Inflation can be, bolstered, increased if oil prices are rising, right? If there's a rise in the cost of fuel and energy, which everything costs, every product that you and I purchase to some degree has impact from the energy sector. If energy prices go up, the rest of prices will go up eventually as well. So if you have a big war event, or you get some sort of OPEC meeting where this is not a good example, because yesterday OPEC, Saudi Arabia basically said they're going to increase the supply of oil that they sell. I believe that's a very simplistic version of what they said. But if you get oil prices rising, long story short, it can contribute to or make worse. I'm looking for a vocab word. It can make the inflation situation worse. Okay, so we're going to watch oil. Someone said war is the main factor, main driver. It's one of the drivers. That's on the supply side. When you're talking about oil, it comes down to the supply and the demand of oil. Supply side can be things like war, right? So if you get a big war, unfortunate event, something that happens in the Middle East, something that happens in Eastern Europe, something like that, what that causes is supply to get diminished. Why? Because supply going down due to boycotts and sanctions and restrictions on how much oil supplies, and then the massive demand for oil and the hoarding it for preparation for a war, that can impact the supply, meaning reduced supply increases the demand for what is available, prices go up. So there is the supply side, but there's also the demand side. If economies of the world, which by the way, one of the reasons I'm kind of still bullish on oil on a longer term basis is China, right? China's stimulus potentially increases the demand for oil to some degree. If China's economy does start to roar, if it starts to pick up again, which has been in the dumps for a while, if that starts to reverse, the demand for oil could go up. Even if there's a bit more supply in the equation, you have to think about, if you're an oil trader, if you're a commodities trader, think about the supply and demand fundamental factors that are driving the prices that you're looking at, right? That's something we have to think about if you're going to be trading oil. So in my view, if oil keeps going lower, I'm going to start dollar cost averaging on some companies. I have already sold puts on one company, Exxon Mobil. Take a look at this. I sold puts on Exxon Mobil. I know this might be a little bit hard to see. Basically, I'm willing to buy some Exxon. I got paid a premium for selling a put, which is a complex theory if you've never heard about options, but basically you can sell. It is essentially like getting paid to put a buy limit into the market. That is essentially what selling puts is. The downside is you have to have capital behind it. You have to be able to buy it no matter what. If the market tanks, you still have to buy it at the price that you agreed to, so on and so forth. There are downsides with everything in trading. But I sold some puts on Exxon, and if the market keeps going lower for oil, I will sell some more puts. So my strike price is 112 on Exxon. In fact, it'd be easier if I showed you on my broker portal. So I sold puts. They expire a few days from now. If this expires out of the money and I sold the put, what that means is I won't have to do anything. I just collected the payment for writing that option. If the market let's say it does this, let's say in the next few days, oil rebounds a little bit and this put expires worthless, I'll probably sell another put. Basically sell another put, collect more premium until I actually do get assigned. I would like to get assigned some shares of Exxon Mobil at a discount. So that's how I'm playing oil. I'm not looking to just buy oil futures contracts or buy USO or anything like that. I am looking to buy companies that I like in the oil sphere. Anyways, guys, we just had PCE numbers. I apologize. I missed that. Let's pull this up here. Okay, so PCE numbers came in 2.7 compared to consensus. This is the exact same. Month over month came in 0.1 compared to forecasted 0.2. We do see, let me just fix my tabs here. We do see so far S&P 500 up a little bit, NASDAQ up a little bit, Dow Jones up a little bit. Russell is up on that 0.6% or so. You got the Nikkei, by the way, down 4% this morning. China's up another 2%. The VIX is lower here this morning. Dollar index looking like it wants to take out these lows. Again, inflation continuing to cool, as we kind of talked about. That's the expected. The expectation was more cooling for inflation. So dollar just sort of rolling over and continuing its downtrend. For those of you watching the dollar index, keep a tab on this for a second with me. If I would be very curious to see if we get a break through these lows, guys. If you get a break underneath, let's call it let's give a number to it. Let's see, 100.25, let's call it. If you get a break underneath that, then you've got some interesting potential that the dollar could just continue to slide lower and lower. The trend is your friend here. And if you're against it, it's been a rough one. If you've been buying the dollar this year, it's been a really rough year. Dollar index has been very, very weak. And this is the year for metals, right? We've talked about that quite a bit. I am long silver. This is a current position for me. In fact, we'll pull up, let's just pull up, see where the silver position's at. Silver position, I'm just going to filter it here so I can see it a little better. Let's go just ETFs. Silver position is the only current position I have on the momentum side of things. We're looking pretty good, up about just under 13,000 on that position. Silver's up 0.14%. Gold also continuing to trend up. I like the metals long. I'm still long on them or on silver. I do like silver more than gold at this time, but that could change. So let's see. Let's double back and take another quick look. We've got S&P 500 up about 0.15%. Not a huge movement there. A little bit of a bounce back from yesterday's mini drop. Indices have been kind of range bound for the last few days. Here's a look at the Dow Jones on a 4-hour chart. NASDAQ continuing to trend nicely to the upside, looking strong. The indices look very, very good. I am looking for a chance to buy on dips, but there just hasn't been a lot of dips available recently. So on the silver side of things, I am staying long. That's a trade that I'm currently looking at or currently managing. So I've got my stop loss trailed on this. And by the way, this was all shared inside of our VIP room. If you're not in the Discord, we'll drop a link here in the chat to where you can speak directly to a member of our team and get access to our trading signals. Yes, we do offer trading signals, but more importantly than just offering trading signals, sometimes you get dabbed on for like, oh, he sells signals. Well, I pull it up all the time, and I do this not to be arrogant or anything, but the truth is if you're going to pay for signal services, you better know that the people that you're watching are actually trading live brokerage accounts. I just pulled up my Webull account. I don't do this to brag. I don't do this to flex on you. I do this to show you that when you purchase our signal service, if you purchase access to our room, these are trades being taken on real capital, real trades, no nonsense. I had somebody ask me today in my comment section, Nick, if you're such a good trader, why do you sell a signal service? And you can't ask me that question because I've answered it 7,000 times. I'm very experienced at answering that question. The answer is basically, why would I not sell a service that I'm doing this myself. I trade myself. I enjoy making videos and content about it. Why not sell a service that I can also make money from? But what you have to understand is the difference is if you follow people's signals who don't show you a live brokerage login, there's no point in doing that. You don't know if they're actually profitable. But I do this to show you that you're not wasting your time if you decide to sign up for our signal service. So if you'd like some information, here is the direct message link. If you click that link and chat with us right now, we'll give you a nice discount for being a stream viewer, supporting our content. Just ask about the current discounts available and they will hook you up with some discounts on the memberships here. It is Friday. Come join us. I'm telling you, it is worth the money. It's not very expensive for the value that you're going to get. I wish I had a service like this. I wish that when I started trading, somebody would just straight up live log into their brokerage, show a real account. And if they offered me a service where I could learn from them and see what they're trading and more importantly, why they're trading it, I would pay for that service. I genuinely mean that. So I have created with my team a service that I think is actually something I would purchase as a new trader. And I'm speaking genuinely, it is worth the money. So come join us if you haven't already. It's really something to consider. If you are out there struggling, you don't really quite get this stuff yet, it's understandable. This stuff is hard. Nothing about this is a get rich quick scheme. But if you'd like to learn, come join the group. Okay, so let's take a look back at the dollar, see how things are rolling here on the daily chart. Again, I'm watching for a break through these lows. We've held support for the last few weeks around this 100.5 level, but that could be changing. I mean, inflation is continuing to cool off, and the U.S. economy is still, I would say it's not weak, but it's weakening, right? So the question now becomes, if you're a dollar bull, some people are asking, I've got a lot of comments recently, Nick, when is gold going to top? When is the dollar going to bottom? A lot of these moves seem overextended. Well, the overextension can happen for a lot longer if the data continues to line up. Also, sorry, guys, I think I'm getting an Amber Alert. Oh, no, that's a phone call. We're just going to ignore that. It's a random number. I don't know about you guys, but if I get a random caller number, I never answer it unless they leave me a voicemail or a text and it's somebody I actually know. Anyways, get so much free tips from these broadcasts. Thank you very much. Appreciate you, Danielle. Hope everyone's doing well today. Hope you're trading okay. It's been a wild few weeks in the markets. I can say that. Rate cuts happened. We've seen back in August, you had the big scare on the Japanese yen. Speaking of Japanese yen, how is that? Yeah, look at that. Dollar yen's down today. I saw the Japanese stock market was down about 4% today, which is a big slide, especially when China is up another 1.5 today. But let me complete my thought on that. So with the dollar index, if you're somebody who is wondering, when is gold going to top out? When is the dollar going to bottom out? It's not based on the price action. I'm telling you, if you're looking for a price level that's going to hold and reverse the chart, it's going to be a lost cause. You need to look for changes in the data, okay? So what do I mean by that? Well, if you want to be a bull on the dollar right now, we need to see some more decisive economic data changing. So for example, okay, here's case study number one. Yesterday, we got GDP numbers that came in line with expectations. If you're a dollar bull, you wanted a blue chart. You wanted a blue GDP graph to pop up into your edge finder to say, okay, GDP numbers beaten expectations. That's strong for the US dollar. We also want to see services PMI come in better than expected. Last time around, we didn't really get a big beat there. In fact, the one time before we got a miss. Manufacturing in the US, you want to see some upbeat numbers. Not quite getting that. We're still below 50, which shows contraction in manufacturing. What about retail sales? Retail sales data points. They came in a little bit better than expected. So there's something for the dollar bulls. But here's the big one. You want to see jobs data. You want to see it coming in better than expected. Okay. You want to see jobs added in the US being rock star. You want to see this environment where jobs data was beating expectations for a while there and looked very strong for the dollar. Again, if you're a dollar bull, these are the signals you want to be looking for in the economic data to make a decision that, okay, maybe the dollar is actually going to show signs of strengthening from here. So something to think about. Harry says A1 Trading website has loads of free education. Yes, we don't sell courses. A1 Trading, we don't have a course for sale. It is all available for free on our website. There should be a cost to them. They're that quality. We worked very, very, it's a lot of work to put together a course material, and we put it for free on our website. Now, we're not saints for doing that. We'll probably collect your email at some point. We'll probably market our tools to you at some point, but the course itself is genuinely free. So head over to a1trading.com. We have several courses available for free that my team and I have put together. But yes, there's no catches there. You can genuinely, we don't sell a course. We do sell software. We're a software company. That's why I'm showing you the software right now, but I do genuinely use it, and many traders around the world do as well, to get a better idea of what the fundamental data is actually looking like. So let's continue the story. If you are somebody looking for the bottom on the dollar index, where can we find it? It's not on the technical chart. In my opinion, it's in the fundamental data. Okay. We want to see upbeat jobs data. That would be a surprise to the upside for the dollar, could be a strengthening factor there. Unemployment claims, we want to see unemployment claims actually continue to trend lower, which we've started to see some, right? You want to see people claiming unemployment at a lower rate. Something to think about there. Also, by the way, while I'm chatting about the Edge Finder, if you would like to try it out, we'll drop the trial link. We do offer a 30-day paid trial. It is $199 to try our software for 30 days. And that payment does get credited towards your final purchase of the tool. So if you pay $199, when you go to finally purchase it after your trial period, that credit will be removed from the price for you. So if that is something you're interested in learning more about, you can apply here, or we'll drop one more link. If you want to just chat with somebody for more specifics or need help with that concept, please feel free to chat with us on our website. We'll drop the live chat link with us. It is not a robot, it's a real person who you'll connect with. You can click that link right here and they'll get you sorted out. So with unemployment claims, we want to see unemployment claims coming down if you're looking for dollar bullishness. And if you're a dollar bear, you want to see this thing continue to go higher. By the way, if you want metals to go higher, you also want to see all these data points the opposite, right? And then unemployment rate. This is a big one, right? So we want to see unemployment rate. If you're a dollar bull, you want to see unemployment rate topping and coming back down. If you see unemployment rate rising, that would signal the labor market is weak in the US and not as positive for the dollar index, right? Main focus is exactly on the US dollar. Are you a robot? Yes. Main focus is always kind of on the dollar with my content, with my videos, so on and so forth. The dollar kind of holds the key to everything else. If you're watching indices, you want a strong economy but cooling inflation, right? If you're watching gold and silver, you want to see weak economic data and cooling inflation. That would make metals look very strong as a possible kind of alternative investment, if you will. Also, my cat just ran by. I think she saw something in the window. Since I've gotten home from Greece, it's so cute. My cat has not left my side for like one singular minute. Let me see if I can show you to her. She's a little camera shy. Hold on. Oh, here she is. Her name is Luna. And she's very busy right now. She wants to go look out the window, so she wouldn't let me hold her for very long there. Yeah, anyways, she actually trades for me. I've taught her how to trade the markets for me. So I just sleep all day and she does all the trading. And it's just a quick question. If the payment is like once in a lifetime, how are you making enough to continue with all the costs? I'm just curious. Don't have to answer if you don't want to. Great question. So we offer memberships and access to the Edge Finder for one-time prices. Now, the reason we do that is because, honestly, it makes us more money because a lot of traders, they quit very quickly. So if you are somebody listening right now and you are, this is me being as honest as I can. So if you go to a gym, right, what do they sell you? A gym membership, they want you to buy the yearly. Why do they want you to buy the yearly if they could make more money from you if you just paid the higher priced monthly cost? The reason for it is because memberships, gyms know that you're not likely. The average person that signed up for a gym does not actually stay there for very long. They only come for a few months and then they leave. So the gym wants to sell you a longer term package. Now, if you are somebody who goes to the gym very regularly, then yearly membership is a wonderful deal for you. Why? Because you get discounted costs and you know you're going to go for years and years and years. I love going to the gym. It's something that I really like. It really helps my mindset. It's very good for me. I know it just makes me feel good. So I know I'm going to the gym for the rest of my life. And so if they offered a lifetime membership at a gym near me that I really liked or something, I'd consider it. Because again, I know I'm going to be there for the long term. So the same thing, we do the same cost model with trading. Most people know that people quit trading, right? So we offer lifetime access to our Edge Finder or to our Discord group as an option for people who are very serious about this stuff and know they're going to be here for the long term. So the Edge Finder is priced ideally for people who are very serious traders. If you're a serious trader, you pay one time for access to our membership group or the Edge Finder. And if you're here in 5 years, your price was dirt cheap, and that's how we want it to be. So people who purchase our stuff for the lifetime access option, you get an incredibly good price if you actually see yourself trading for many years. So there's your honest answer. Are you a robot? That was pretty funny. Sometimes I go on autopilot in these streams, I'm not gonna lie. Russell's up 1% here. Nikkei's down 3.5. Nas is up 0.2. Dow's up 0.2. Silver's making a move. Let's go. I'd love to see silver take out these highs so I can trail a stop, although didn't really get any higher lows. If we get something like this, that would be a great opportunity for me to trail stops further on that silver position that I've got. Nick, what are your thoughts on U.S. equities if Japan hikes rates later this year? Another potential carry trade unwind. That's actually a good question. I think it could, Harry, that's a great question. I think it could cause a shakeup in markets again, but I think it's probably the repeat of what happened a few months back with August's big sell-off. It was sort of a 1-month ordeal. I think if you get a carry trade unwind thing again, unless it's on some seriously devastating news, that's another buy the dip opportunity in my personal view. Don't copy anything I say or do. This is not financial advice. But I do think that if the market sees a big correction off of a carry trade unwind fear again, I will buy that dip again like I did in August. My mistake with that was I didn't hold through everything. So I ended up, I've told this story like once before, like once per hour before. But I bought the S&P 500 over here. I trailed stops, trailed it right here, got taken out for a profit. And then the market bottomed out and left me behind. And I've been telling that same story for weeks now. I am kind of over it. But what I'm waiting for personally is a dip on these things to potentially get back involved on the S&P, the NASDAQ, the Russell, etc. But I'm not holding my breath on these things. These things could trend up for a while, and I'm just trading other things in the meantime. I've been fortunate enough to find other great trades to take, like this silver position. So I just keep kind of watching that one. I've also done some, put selling on stocks that I like, etc. Also, we've got Kenzo here. I apologize for making him wait. I didn't see him there. We're going to be shaking up the stream, bringing in Kenzo for some commentary on Fundamental Fridays. Before I take this quick break, just a reminder, if you'd like to join our Discord or get access to the Edge Finder, I mentioned our lifetime options. If you'd like some more information about that, or you'd like to speak to someone from our team about it, we do have a couple support reps that are on standby to help you with that. Please make sure if you have those questions, just send us a direct message. Someone from our team would be happy to connect with you and give you any answers to your questions about, the lifetime memberships. Sorry, I think my lights died. We'll be right back with Kenzo while I try and figure out my lighting. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, we're back with Kenzo. Hey, Kenzo, how you doing, man?
I'm doing great, thanks, and you, man?
I'm doing well. It's good to have you back on the show for Fundamental Fridays. We just had the PCE numbers, which came in lighter than expected, continuing the disinflation trend. Last time you were on, I listened to you talk a little bit about continued dollar bearishness. And I'm very curious, with the PCE numbers coming in light again here this morning, what are your thoughts? Are you watching the dollar? Do you have any trades on right now?
Yes. I wasn't expecting that to be as cool as this. I wasn't expecting a negative number or a quite lower number. But yeah, it's good because it's happening now. So which means I was bullish already on NASDAQ and other pairs. So this actually confirms with us that, yeah, we actually on that lower inflation. So I think Federal Reserve, they don't really have any choice but to keep cutting the rates. So yeah, I'm expecting to see some very nice moves here on the dollar index. I think we will see maybe a continuation of that downtrend, which at the end of the day, that will be a good thing for us to keep buying on Nasdaq and other pairs.
Okay. Yeah, fair enough. I think that it's kind of just keep it simple, right? The stock market wants to see rate cuts. Seems like more evidence for more rate cuts is in the picture with cooler inflation numbers. It could just kind of continue the upward drift, if you will. So show me, I'm just curious, in terms of the NASDAQ, the S&P, the Dow, whichever ones you want to look at, how are you looking to play them? Do you have positions open? And another question for you, if you didn't have positions open, what would you be looking for in order to enter trades on NASDAQ, S&P, Dow, etc.?
Currently, as we have lower rates, I will mostly focus on NASDAQs, not really US 30. I think US 30 because it doesn't really have much of tech companies. And at the moment, once the rates are lower, they tend to perform very nice. But US 30 mostly once the rates are going down because they have banks on US 30, they tend not to perform not really that good. So mostly it will go slower. So on the tech, actually, I will be just focusing on actually a bounce back. I think we're coming from a very nice aggressive sell. That can also be a very nice thing for me to say we need to go higher. Plus, we are going towards the end of the year. So I think people are going to spend more. They are going to buy new iPhones and stuff, or let's say tech. And some they are going to vacations, so which means they are going to use a lot of tech. They're going to have meetings on Zoom. That is going to boost most of the companies that we have on Nasdaq. So one way or another, I think we're gonna end this year going up. Another thing, it might be maybe elections. Maybe that might be something that we will. I will have to actually look closer because sometimes the market might panic and might not really react the way we want until maybe we have the president. But for now, I think I'm actually bullish, like seriously bullish.
Yeah, no, I mean, I don't blame you at all. I am having some FOMO myself, Kenzo. I wish I was in more technology names right now. That being said, I think that if we've done this many times together, we've discussed this concept, but I just want to say for myself and maybe for others in the audience who are feeling the effects of FOMO right now, you have to stay patient because here's the thing. There are times when I come on these live streams, Kenzo, and I've got a big trade running and it's awesome. And I'm, telling everybody else, oh, just be patient and wait. And it's a lot easier when you are in the trade to say, wait for the trade. I personally am not in the NASDAQ or the S&P. I really wish I was. And all I can do, and for people listening in the audience with these sorts of FOMO moves, is be patient, wait for the market to set up for you. There's no point in making any sort of quick decisions or rash decisions. And at some point, these things will pull back. And if you're bullish, you might get a chance to get them. But if you don't, there's no, it's not a very intelligent thing to chase. So I guess just wanted to add that thought for people who are watching the indices, people who are watching. Another one is gold right now. I'm curious your thoughts on gold too. I mean, gold has really just made a rip to the upside. So if you're somebody on the sidelines, what do you do with gold right now?
I think, yeah, you're right. You don't really have to chase. Unfortunately, it's difficult in this world of finance because just watching people making money while you're not doing anything, it might seem like you're missing out. But if you are in, you will see that no, I'm not actually missing anything because being on the market, it doesn't really mean that you will always make some profits, unfortunately. So sometimes you just have to learn to wait. I think that is the difficult part of trading. So learn to wait and focus on your own thing or focus on whoever that if you have a mentor or someone who gives you those signals, I think it's better to wait for them because at the end of the day, you have to be patient, you see. So you might miss something today, but there will always be an opportunity coming. So, and unfortunately, once you chase, you end up taking some losses along the way. When the simplest opportunities arrive or present themselves, you no longer have enough to take advantage of that, unfortunately. So at the end of the day, you start to learn the hard way. You see, so I I think maybe if maybe for example, if maybe I can reverse, let's say if maybe you're starting to trade today, if someone can ask, obviously, I will say the first thing first that you can learn in the market, learn to be patient, which is not really easy, but learn to trade also, like learn the strategies. But the first thing that you can do, be patient. Can you wait for the market to confirm or to reach certain areas that you want it to reach? And if you can do that, I think you have enough, even though your strategy is not going to be 100%. But by learning to be patient, that can actually help you a lot. But along the way, yes, you cannot take some losses here and there. But if you learn to wait, I think that is going to be everything.
Yeah, no, that's very wise words. And again, at the end of the day, I'd rather be wishing I was in a move than wishing I was out of move. I've said that for a long time. I don't know where I got it from. I heard it someone said that somewhere along the way in my trading journey. It really stuck with me. Basically, I'd rather be waiting to get into a trade than wishing I was no longer in a trade. So if I was to go out and just buy the S&P 500, and let's say that something drastic changes in earnings expectations or the inflation story or some war breaks out, you never know. And then suddenly this thing tanks for 3 weeks and we're down here again. I would feel very silly for doing that, first of all. But second of all, I don't have a very good risk to reward. How do I, if I'm going to use market structure here, where I can't really put a stop loss except for way down here, which opens me up to a lot of risk. Whereas if I waited for something like this, my risk reward suddenly looks a lot better just by being patient. So just something else to think about. Your risk reward is very, very important on that front. So yeah, we've also got yields coming down here. That's probably contributing to the weakness in the dollar here this morning, down 0.36 on the dollar index, helping metals go higher. Another chart I had for you, Kenzo, is Bitcoin. I'm curious your thoughts on this one because Bitcoin has had a bit of a move higher here recently. And do you think Bitcoin has the potential to break higher? If you're somebody who thinks that the NASDAQ is going to make a big push from here, the Bitcoin offers you sort of like a leveraged bet almost. It is almost a kind of a very volatile instrument that does typically follow the general direction of the NASDAQ and S&P, et cetera.
Yeah, you're right. I actually have quite similar structure. So I think for now, if maybe we can have that breakout, I'm expecting to see a very nice push to the upside. Plus, I think maybe we might say it's also going to move quite similar, not the same, similar to gold, because now we have like tensions in the Middle East. And with that, because there are going to be interruptions with the economic systems, so crypto is going to be the one that is going to move very nice. People are going to make payments with crypto, so which means we might see maybe the market trying to move that much. The thing is, maybe the volume might not be that much, but the yields is going to be increase actually. But with the rates cuts coming also, I think, yeah, I'm actually in for a nice bullish move. But firstly, if we have the breakout here, maybe we'll see something, or maybe the market might respect here. But I think the market already respected this level several times. Maybe it's a time or a good time for the market to break out of that.
Sure. I think if you if you do like Bitcoin from a fundamentals perspective, I think you kind of also like something like the Russell, because Bitcoin typically, from studying it in history, basically it tends to go up when everything is sort of like a fertile crescent, if you will. When everything is good, Bitcoin typically has a really good run. And same thing for the Russell. So the Russell is the small cap index for US stocks. It's not had a good couple of years with everything that's gone on compared to, I'm looking at a weekly chart. Look at the NASDAQ on a weekly chart, look at the S&P on a weekly chart, and then look at the Russell. You're pretty much flat on your money for a few years now, actually 4 years, close to, a fifth potential year of being sideways. Now, why is this? Well, the Russell is smaller companies that are more sensitive to borrowing costs. So with the Fed raising rates, it's been a detriment to these companies. But same thing to Bitcoin, right? Bitcoin is also it's like a very pampered, fragile child, right? It can't handle a tough environment. Bitcoin is the same way. So these two things potentially could have a big break if you do continue to see inflation cooling and signs of the economy strengthening. So something to be on watch out for is if you continue to see a good environment shape up for 2025, Bitcoin, Russell, they could have a lot of upside and actually see some potential catch-up moves as well. So it's something I'm watching very closely. I like the idea of potentially building a position on Bitcoin if we get a nice breakout. Watching for this on pullbacks, sort of things, and we'll just have to see. But definitely something to think about. Also, just curious, if you were to pick Bitcoin or Ethereum, which one would you choose?
I will actually choose Bitcoin. Ethereum, I don't think it moves that much, or let's say it's not really. It's used by most of the cryptos as their as their base network, but I feel like Bitcoin is way much bigger than that. So, and it's actually the name is just popular. So Ethereum, some people they don't even know that there is Ethereum. But yeah, I think Bitcoin is gonna be the one that I can actually look up to.
Yeah, that's fair. I kind of agree. If I were to pick one over the other, it would definitely be Bitcoin, just for its the namesake, right? It's just got all the marketing behind it as the more notable original cryptocurrency. So we'll have to see. It's kind of like gold and silver. Gold is definitely the more notorious thing, even though silver has been used arguably just as long or longer in in global history. So it's something to think about. But anyways, Kenzo, I want to thank you for coming on to the show here today. Before we let you go, let me just mention to everybody watching, Kenzo has his own YouTube channel. We just had the link dropped in the chat. If you guys could do me a big favor and go support Kenzo's channel, Extra Hot Forex, get free tips, value, and keep up with everything he's looking at in the markets day to day. If you liked Kenzo's commentary, do us a big favor, go subscribe to him on YouTube. If you're watching on Twitter, you can head over to YouTube and just type in Extra Hot Forex. Hit subscribe, and I very much appreciate you for doing that. Kenzo, thank you very much for coming on the show today.
Thank you very much, man.
All right, have a good weekend. We'll see you next time. Let's keep pushing on here, guys. We're going to take a few more minutes to look at some charts together. I'm still in the silver position. I've got my stop loss just below this structure point here, and also I'm going to try and fix my lighting. It's horrendous. My two, we have these two lights at the office. They look like this. These things, and they actually were doing a great job, but then they died. So like they ran out of battery. Anyways, we got the desk lamp. It's a struggle here. I am kind of missing my setup at the office. We got a studio set up. It's much nicer. Lighting looks good. Anyways, do you think the aggressive rate cut by the Fed is a premise to a recession coming? Well, it kind of depends. It really depends, going back to what we discussed earlier about the state of the economy. Rate cuts coming in fast, it would signal that the economy is showing signs of slipping in the eyes of the Fed. But ultimately, it comes down to what unemployment rate is looking like, what jobs data points are looking like, etc. If inflation's just cooling, but the labor market's still strong, that's just bullish for the market, right? If the labor market is weak and the Fed is cutting data fast or cutting rates fast, that would signal potential recession fears. Right now, that's not quite what we see. Batteries on those last for a good 5 minutes, says the producer. Yes. Yeah, I got to like keep them plugged in or something. That's crazy. I'm pretty sure that one was fully charged and it was like 20 minutes in, it was dead. About 25 minutes to go until the stock market in the US opens up. I'm curious to see how the market plays out here on this Friday. Are we going to continue to see the melt up, or is there going to be a pullback coming? I mean, it is one of those things, guys. You get moves like this in the stock market. If you're someone like me who trades indices very frequently, it can be very frustrating to wait, but suddenly you just wake up one day and the market's done this, right? And then it does this and it drops very, very quickly. So it is a bit of a musical chairs game, in my view. If you're buying right here, sure, you might get a big up day, but you also could very well see a huge down day. That's the nature of indices. When they drop very far, very fast. And when they rise very kind of gradually and slowly, right? Except for this year. This year's just been a straight shot to the upside. So we'll see. Can you analyze gold? Not a whole lot to do here on gold. It's going to be super boring, but this is my commentary. Can't sell it, can't buy it, wait for pullbacks. That's the only thing I can do. I mean, if you're looking at the 4-hour chart and you're looking to like day trade it, maybe you could get fancy, but I'm not really a day trader. What's up, James? James taking over the show in just a few minutes here. So yeah, something to think about is when you get these markets when they're just trending and trending and trending in one direction, it can be very easy to start thinking they are just going to forever do that and it's never going to change. In fact, this whole year, if this is your first year trading, I would definitely encourage you to do some research. If you watch the indices and you're like, oh, these things just go straight up, I'm only ever going to buy them. It's very easy to only buy them. Okay, yes, I prefer the long side for sure, but it does not mean that this will continue. A mistake traders would make, a very common trading mistake, very, very common, is they see this and they expect this. That's not how the market works, right? If you expected 2022 to do exactly what 22 did again, here's what you would have done. You would have said, stocks are super risky and they're going to keep going much lower, and you wouldn't have been a buyer. So you have to understand the trend is really, truly your friend. In 2022, it was a dangerous year to try and long anything. Trust me, I know I made that mistake too many times. 2022 was a rough trading year for me. 2023, I was a bit contrarian, ended up being one of my best trading years ever. I was very bullish all year long, pretty much. This year, I was cautious in the first half, bullish for the 2/3 of it so far, and just missing out this last recent rally. But it's been a pretty good trading year for me, not an incredible one. I've underperformed the index. I wish that I had just stayed in my long position. I'd be outperforming it. But what are you going to do? You can't beat yourself up about trades that you missed or trades that trailed you out. You can't do that because it is a perpetual, if you always are like, oh, I should have done this with my trades, or I could have, well, you didn't, and you didn't do it. And there's no point in talking about it or waiting on it, right? All you can do is wait for the next trade, manage your risk better next time, trade like a human being, trade like an adult, don't trade like a child, right? So wait for pullbacks. That's what I'm doing. I'm just looking for opportunities to get long in the indices if they set up, but if they don't, oh well. I have one position open on the momentum side of things. I have several positions open on the options side of things. So if I go over to here and I just filter for options, I sold a bunch of calls on some things that I own, and I have several stock shares that I own that are doing pretty well this year. So we'll see. Anyways, guys, we're going to take a quick break, and then Forex James taking over the show here for a little bit. We're going to drop the link to his content as well. We got our next guest host taking over the show for a little bit. Do me a big favor. If you enjoy James's content, make sure, if you have not already and you already know James, you watch him regularly, make sure to go subscribe to his content as well. Help us out, support his work. That way, he keeps coming back and adding value to our community here. So with that said, we'll take a quick break and we'll be back with Forex James from Elite Traders. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello. How is everyone doing? I hope you're all having a great end to the week. Happy Friday. So this month has been possibly, in fact, it is the best trading month I've had this year, which is great. So as I did on Wednesday, I'll prove it. So again, for anyone that watches my segments on TradingX show frequently, you'll probably have heard me saying I was moving money over to a MetaTrader account because I wanted to have my FX book. Because I sell a service, and as Nick says, I think it's only fair to be able to prove that you actually do what you do. Now, there isn't much data here. As I said, it's still new. So this is the original account that I was trading throughout September. This one is up 4.1%. So you can see a 60% win rate. There's quite a lot of trades, but I do a lot of hedging and a lot of scaling in as well. And then there is a new one. I had to make a new one because I've started doing some account management and things. So I needed to get a PAM account. So in the last 2 days, this one's up 2% as well. So overall, for September, I'm up roughly 6%, which I wouldn't say is a bad performance at all. So one of the best trades is pound yen. Now this was, probably one of the best trades I've had in a while, and not because of the return or anything. I mean, 3% is good, but it was the exit point and the management. So what I'm going to do here is show you what happened. So obviously the trade was sent. We moved our stops to break even, and we had a pretty large daily level, which was here. So I was saying, basically, we need to be very careful. So we moved our stops to break even, anticipating a rejection off this level and basically a push to the downside. And that obviously would have taken us out at break even, mitigating risk. However, if we did see the break above this level, I was looking for the next level of structure, which was through here at 19591. So again, I'll show you that just to prove it, because I know people are very skeptical, as they should be. So you can see here on the 26th, so yesterday, I said I was going to extend my take profit, and you can see how that ended up very, very well here. So this is just following essentially what I've been saying to you guys for the past week, maybe 2 weeks, is the Bank of England held their rates at 5%. The Bank of Japan sounded dovish, essentially saying they're not in any rush to be hiking rates. So already we had a central bank divergence. So knowing that, I was looking to go into long positions. So I couldn't get into anything on higher timeframes. There was nothing here on the daily or even the H4 really for me to get into. So I had to go down onto the H1, which I don't do very often. But I was very determined to get into this trade. So I just implemented exactly the same technical entry model, I guess you'll call it, as I always do. So all we did was find this level of structure, draw the fib from the low to the high, enter off this 50%. So you can see on this bullish, I'm not sure what the candle names are, but after this bullish candle, we had close off 50%. I entered, had some drawdown, and then slowly trickled to the upside. But anyway, we can cover some markets. I know you guys probably aren't too interested in this stuff here. As for open positions, I am in pound yen long again, and it's basically the same reasons. So on this one, this is an intraday position. So I have two trading styles. I have an intraday method, which is essentially just technicals with very light economic biases. And then I have a swing trading strategy that is essentially just fundamental. So on this one, it's exactly the same. Bank of England is relatively hawkish. It doesn't seem like they're going to be cutting rates soon. And if they do, then it'll be more likely due to some negative data we start getting. But at the moment, Bank of England seems relatively stable. And we also do have this large move on the yen that I view needs to be filled in or corrected. We also have the pivot point here, which is S3, being tapped and rejected. So S3 has a 94% chance of basically the price closing back inside or back above S3. So basically just playing statistics here. So very simple stuff. We are also in silver. So we actually got a worse entry than Nick, which I'm a little bit jealous of, but same idea really. And we've reduced our target to $33. So yeah, this one should ideally be hitting take profits soon. Just going for just under a 1 to 2 here. So that's it really. Portfolio is quite quiet as we head into the end of the month. So we can cover gold. I think Nick already spoke about gold, but yeah, there's really nothing going on. You can see I am looking for pullbacks here, but so far there's just nothing. Gold's on a rocket ship to the moon. And if it doesn't have all the passengers, it doesn't seem to care, which is fine. So all we really need to do is just wait, and we can try and find something or somewhat of some sort of pullback here, whether it's to this sort of minor level of resistance that we had or the more major level down here when we were creating new all-time highs. I don't know. Unfortunately, I can't predict that. Yeah, it's a case of just sitting and waiting. I am still in favor of the 3,000 level getting hit. Let me mark that up actually here. So 3,000 is the long-term target I've got. In terms of the time frame for this, I've got no idea. I couldn't tell you whether it's 6 months, a year, 2 years. I'm not sure. But eventually, I am looking for this 3,000 targets. And if we can get the pullback, I will look for a take profits at 3,000 and just trail stop slowly until we get there. So essentially more looking for a position trade on gold rather than a swing trade. So yeah, we'll see. But for now, there's nothing we can do. Angus, hello. Good to see you. Let's have a look at some of the indices. What's going on here? Yeah, it's kind of difficult, really. It's very similar to gold, nothing going on. FTSE, again, going to prove what I've been saying. It's just one of the worst indices, if not the worst. Yeah, I feel sorry for anyone that's invested in this or trying to trade it. So for the last, when was this? 24th of May. So yeah, for quite a long time, FTSE's just been stuck in a disgusting range. And it's on the H4 as well. This isn't necessarily a low time frame. So yeah, it'll be very hard to trade the FTSE. The NASDAQ seems to be heading to the upside quite nicely. But again, in terms of entries, there's nothing here that interests me. The Nikkei, interesting. So we didn't seem to get the break in the retest. We seem to have broken and failed to hold above. I'm not looking to buy the Nikkei. It's more just, keeping an eye on it. That's how it works. Good CT. Market's pretty quiet today, setups wise. Yes, it is. I've been a lot more focused on day trading recently, actually, which I think is why I've had such a great month. Just because the markets are quite aggressive. I mean, it's dollar bearish, yen was bearish. Now it's yen was bullish, then it turned bearish, and now it looks like it might be turning bullish again. The euro's been pretty stable to the upside, so is the pound. But the problem with trying to get into swing trades at the moment is everything's very extended. So if you look at any of the indices, gold, silver, copper. So yeah, day trading was kind of the way forwards for me this month. It was kind of the only method I could come up with to make some money. So yeah, I mean, I'm just trying to think if there's anything in terms of economics that is worth talking about or have any trades on the table, and there really isn't. So dollar CAD, not too interesting, really. Let me pull something up, actually. Let me see if I can find something to show you. I'm not sure if we'll have one. Just give me a second. Yeah, we don't. That's unfortunate. I was going to show you a bank report from Credit Agricole, because they sometimes do a very simple breakdown, and that would have given us some nice information to quickly cover, but they haven't sent one today, which is a bit frustrating. But there you go. What can you do? So is there any charts you guys want me to cover? Saudi and oil. I've not looked at oil, actually. Let's see. Yeah, I'm not updated, actually. Let's have a look together and see what the situation is. Where are we looking? Let's go to CNBC. Crude oil falls nearly 3% on reports Saudi committed to production increase. Okay, well, that makes a lot of sense. So if they're looking to increase production, that obviously leads to a lower demand. So that means lower prices. So generally speaking, really, we'd be looking to go short on oil. However, where? Let's have a look. I mean, obviously, this would have been a great entry up here, but we clearly didn't get that one. So we'd be looking for the next pullback really within oil here. So it would be looking for the 50% level. In this situation, I think I'd have stop loss at the previous high, just to be safe. So obviously, the reason I would do that is if this high is broken, that means likely we'll be going to head and create a higher high and break out of this downtrend. So yeah, I think generally just looking for a very simple 50% pullback and then a continuation to the downside. But yeah, at the moment I'm pretty uninformed in the economics. I've been quite busy with other things. Dollar Swiss, pound Swiss. I am in pound Swiss actually, although I'm not sure if this trade is still valid. It's been hovering, well, just ranging really since we entered. We entered on the 23rd, so 4 days, and it's done nothing. So, you know, what can you do? Really, I just realized my camera's a little bit off here. So yeah, technically nothing here. I'm still pretty bullish on the pound for now. I remain in the pretty strong, the strong camp of a bearish pound in the long term. At the moment, I think it's quite clear that the pound is performing quite well. But, you know, I could sit here and say all of the currencies are bearish in the long term, and eventually I'll be right on one of them. But yes, for the pound specifically, at some point, I do anticipate we'll start having a pretty bearish cycle there. Pound yen. I am long in pound yen. So I'll cover this again just briefly. So Bank of England held rates at 5%. The Bank of Japan, last I heard, again, I'm a little bit out of time, or not out of time, that's the wrong word, a little bit out of touch with the economics from this week. But from what I remember, Bank of Japan sounded a little bit more dovish in terms of, they said they're not in any rush to hike rates from what I remember. Please correct me if I'm mistaken on that though. So essentially, central bank divergence. We've also rejected S3 here quite nicely after a huge run to the downside. And this is essentially how I trade news. So I've had a lot of pretty good trades actually trading R3 and S3 because they statistically hold up very well. So normally if we get news like you see here and we come down to our S3 or even R3 and we start consolidating and rejecting, I will take a short position regardless of the economics, regardless of anything, because the data and the statistics are there. So generally speaking, I'll have a 94% chance the price will, hit R3, and then 94% chance it will price will close back below. So I'm happy to play that statistic every time, 10 times out of 10. It's a BOJ bodge job. Yeah, well, we'll see how the Bank of Japan holds up over the next 12 months. Hi, James. You had a look at NASDAQ. Yes, it's very difficult, really. And I feel a little bit, I guess uncomfortable would be the word, sat here and not really being able to do much because the markets are just so, I don't want to say overbought. That's not the right word to use, but they're very extended, or they're very high, or very expensive, whatever you want to say. So, I can sit here and say, oh, I would buy here, I'd do this and do that. But realistically, how can you get into this? There is no pullbacks, there's no stopping points. We're having very, very minor, small time frame pullbacks on sort of the 15-minute, but unless you're day trading, it's pretty useless. Pound dollar, I'm very bullish on. Again, Bank of England, and we also have a dovish Fed. I have a feeling, and again, that word is pretty key, feeling, I don't know, that the Fed is going to cut again in November. By how much? I might sound a bit extreme, but it wouldn't surprise me if we do see maybe another 50 basis point cut. Let's see what the CME says, actually. Obviously, we do have a while until the next Fed cut. But yeah, it's relatively even. It's not too far out of whack here. It's 47.9 and 52.1. But yeah, I am quite happy to start saying now it might be 50, unless we start seeing data come out that's positive. We'll see, because the Big Powell market mover said it was data dependent, as he said last time. So best we can do is sort of guess, really. Short position, you mean long? Sorry, did I say, yeah, I am long pound yen. What's about dollar yen? Someone asked me about dollar yen this morning, actually. And it's, I think, the only yen pair that I'm actually bearish on. And the reason is not necessarily because either the yen or the dollar individually, it's more just they're both pretty weak. So if we look at the dollar, we've just broken below this key level here on the daily time frame. You can see it. I mean, obviously, give or take, it's not exact, but you can see there's previous highs here from 2015. We didn't manage to break and hold above until 2022, and now we're breaking back below. So for me, this is a pretty key point, and I would be quite happy. Hold on, I've messed up my arrow here. There we go. Get that wiggly thing there. I'd be quite happy to say that we could maybe come down to these lows. And this is just based on the price action. I'm not really accounting for anything else here, so take this with a grain of salt. But again, if we do start getting more signals that we'll get to 50 basis point cut, it's not too far out of the question that we could see the dollar continue to drop. Now, $90 might be extreme. We might not go down that far. But again, just based on technicals, looking at these lows, it's not totally out of the question, in my opinion. DJ about to break all-time highs. Let's have a look. But yeah, anyway, to answer your question, dollar yen is not something I'm too interested in either way, really. Yes, the Dow is, let's see, it's 21 points away, so about 2 pips. Congratulations to anyone that's in the indices, by the way. You'll have caught some great moves. Obviously, if you're long, if you're short, I feel really sorry for you. Gold, yeah, I mean, again, similar thing to all the other all the other US assets. Really, it's what can you do here? Nothing. You've just got to wait for a pullback. You're waiting for a pullback to 2,300. Wow. I mean, in the grand scheme of things, it's not an absurd thing to sort of expect or look for, but in sort of the short term, I think you'll be waiting a while. Australian dollar Swiss, Australian dollar US dollar. Okay. Yeah, so Australian dollar, I think, even though I've been a little bit out of touch with the economics recently, Australian dollar should be a pretty common knowledge that it will be very strong. We've got stimulus in China. Commodity prices are rising. Two very key factors for Australian dollar or for the Australian economy. So, yeah, very bullish on Australian dollar already. Oh, you wanted Swiss, not CAD. Swiss, I think you could catch a really good trade actually on Australian dollar Swiss, but you would have to time it right. And the reason I say that is because the Swiss is overvalued. It's very expensive. And the SNB, so the Swiss National Bank, is expected to be okay with it or allow it in the short term, but not for the long term. So if we start seeing Swiss weakness, and we start seeing some sort of catalyst that would be against the Swiss, and the Australian dollar is still doing well with Chinese data and commodities, this would be a very strong trade to take. But of course, like I said, you would need to get the timing pretty spot on, really. Pound Australian, again, going back to sort of currency strengths, not really my favorite. We discussed this one on Wednesday, and essentially it's just one of those pairs that ranges. So we've got range, and range. So what can you really do here? In my opinion, you can't do much, because I'm a trend trader. Day trading and swing trading, I need to see a trend, and on Pound Australian, I just don't see one at all. Hey James, what's your thoughts on Euro CAD? Euro CAD, let's see. I'm actually not sure what's going on with the euro. Last time I heard, the Eurozone data was pretty good. But again, I've not really read up on the economics for the past sort of week, roughly. But yeah, just looking at the trend, it wouldn't be outrageous to suggest it would maybe be a buy here. Again, just going from the trend in terms of the economics, unfortunately, I can't really give you much this week. It's, not great. Normally, I can tell you all sorts of stuff about economics, but not this time. New Zealand dollar still hold. Yeah, I know lots of people made pretty good money with New Zealand dollar, basically doing this, because this is obviously what I teach people. Essentially, they all trade the same way. So they were looking at this 50% level. Quite a few people entered and made pretty good money, sort of one-to-ones here. I wouldn't be opposed to maybe re-entering this if we can see another pullback into this 50% level and create a double bottom from this double top. But, maybe I'm asking for a bit much there. The markets are never really that perfect. But that would be good. If we can get another pullback into here, I'd be quite happy to take that trade. Did everyone see UJ manipulation and how waves work? Shorting down. Okay. Dollar Swiss. Yeah, so yeah, I'm glad I didn't take this trade actually. So back sort of the start of September, I had this orange line drawn. I was on this stream saying that the seasonality or the historical data for dollar Swiss is very, very bullish from September to October, which that period's basically done now. It's the 27th of September. So historically, we should really have seen quite a large move to the upside here, which we obviously haven't had. We've got dollar weakness. And again, going back to the Swiss, it's quite overvalued at the moment. So this trade would have been a little bit of a waste of portfolio exposure, really. But to the downside, continuation, I don't see a problem there. So obviously dollar weakness, Swiss strength. Quite happy to say that would be, well, in theory, should be bearish. Okay. Yeah, commodities are doing really well. Let's check copper. Copper's still going to the upside. I'm really annoyed about copper, actually. I was long, and I can't remember exactly where. I think I was long somewhere around here during this move to the upside, and then I ended up closing out way too early and missing this move. And it was just because I needed to free up some leverage, get some leverage, free up some portfolio. So yeah, I had to close out, unfortunately. So I missed all of this and that took a loss, but what can you do? Bit of a bummer. Does the DXY and Swiss have any correlation? It depends. I mean, you could say they're both risk off, but it depends on sort of the situation. The dollar is risk off in certain situations. So in war, you'll often see the dollar do quite well. But yeah, there's not really enough of a correlation there to not take a trade in dollar Swiss, if that makes sense. Unless there is some crazy stuff going on. So for example, if there's a huge war that breaks out, dollar Swiss probably wouldn't be the best one. You could go for pound Swiss, euro Swiss. Yeah. So let's have a look here. Yen is gaining strength again. Pound continues the rally to the upside, but whether this will be sustained, I don't know. Maybe sort of targeting around here wouldn't be outrageous, sort of the 136 to 137. The euro also continuing up. First stop would be 1112, and then from there it would be 114. So yeah, I think euro and pound have further steam. Dollar has a lot more room to go to the downside, and the yen. Actually, it'll be quite critical to see if the yen can break the previous highs, sort of here at 70.9. If we do, then I could see quite easily sort of 72.48. But again, this is just technicals, so it doesn't mean that much really, but it's just levels to keep an eye on. Okay, so sorry guys, just checking something here. Okay. Just gone long CAD yen 50 retracement, level of interest. Let's have a look, CAD yen. Long CAD yen daily time frame. Yeah, I see what you're saying. I suppose we've got sort of the previous highs around here, you could say. It doesn't look bad. Yeah, fair enough. I mean, I'm long on pound yen, so I completely get it. How did the yen drop last night? Well, that's a good question. I was very confused when I woke up. We had, let me pull up my calendar here. We also had, it was an election, I think. I'm really behind here. Let me just double check before I start spouting nonsense. Yeah, okay. Cool. Sorry, guys. I just want to double check what, don't want to sit here and tell you guys some fibs. So we had CPI last night for the yen, but it came out pretty flat. Well, not flat, that's the wrong word. It came out as expected. So here, Tokyo core CPI year on year came out at 2%. It was expected 2%. So that doesn't really back up that idea of why the yen dropped why the yen rose so hard, I guess. I'm just trying to find where I saw it, just because, again, I don't want to. Here we go. Let me just open this for you. So the yen surges after new LDP leader picked, while the greenback consolidates. Japan's LDP leadership selection has not been dragged out. Has not been the dragged out affair that many thought likely, with a record 9 candidates vying for the post. It turns out the economy may have been less important than foreign affairs, blah, 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 blah. Feel free to go and read this. I won't read the whole thing. It's an article on FX Street, by the way, so it's free. Anyone can go and see that. So yeah, election along with CPI, I guess gave the yen some strength there. Seems like the yen is continuing with its strength today. I had a trade on from Monday and had to at 108 had yen literally at 2 p.m. dumped because of news. That's exactly the same as what happened to me on pound yen. So this was my position. It hit by 1 pip last night or early this morning and then dropped. So yeah, it was quite a good feeling, actually. I woke up and I saw the Discord talking about the yen. I was like, oh no, what's happened? Have I just been caught in some nonsense? But luckily, not. Euro pound. So yeah, I guess I've been looking at shorting. Yeah, I don't mind this. Again, I'm quite happy with where the pound is in terms of its strength. In terms of an entry, I think what I already have is fine. So essentially what we're looking for here, or what I'm looking for here, is this 200 moving average come into this fib level. Price also comes in. We have a nice intersection here of the 200 moving average, price, and the fib level, and then we continue to the downside. But of course, I need to do some more research on the euro first. But in terms of the pound, I think more than happy to go long on the pound still. So yeah, we'll see if this setup comes. If not, then fine. Just realized I've not gone over the watch list. So we still obviously have euro pound on the watch list. Copper, still waiting for this pullback. Ideally, I would like to see this sort of daily level through here get hit and rejected, but I think that time has passed. I just realized the fib's not even drawn properly here. But yeah, I think the time for this sort of pullback is gone. If we were going to get it, I think we would have already had it by now. The only thing, I guess, really is this resistance that we've got that's coming up. If we can break this resistance on copper, then we have this and here. So I think copper still has some upside, but we may see some consolidation or slight bearish moves as we come into this resistance, which might provide an entry. We'll see. Euro dollar. I'm not interested in euro dollar, but we can have a look anyway. So this is why I'm not interested in euro dollar. Essentially, what we've got is a very strong resistance through here, and I don't want to buy into such a strong weekly resistance, just because it's just not the best idea to try and buy into this. If it was just sort of an H1 or an H4 resistance, then I might consider it, but not a weekly level. That would be a little bit aggressive from me, but I might go long if we can see a deep pullback, maybe on the daily, if we can see, I don't know, I'm not really sure what I'd actually want to see here. Maybe something along these lines where we come back down and retest these previous highs. So it'd be sort of just this break and retest that I always look for. But yeah, even that is a little bit close to this resistance level for me. Sounds like you're still waiting for a lot of setups to come to the right areas. Absolutely. Which is why I moved more to day trading at the moment. For swing trades, I just can't find anything that's worth getting into right now. So you can see Australian US dollar was looking to go long, just haven't had an entry. I guess really I could have gone long off this support here, but I just wanted to see a bit of a deeper move, which of course hasn't happened. And obviously waiting for gold here. But yeah, again, I've said it a few times, but where can you enter? For me, there's nowhere. So yeah, more looking at these intraday positions. So this is all I look at for intraday. It's just a couple, well, the SP500, NASDAQ, oil, gold, silver, copper. In fact, copper shouldn't really be on here either. We've got euro dollar, pound yen, US dollar yen, and US dollar CAD. But that's about it really. And even for day trades, I'm a little bit stuck here at the moment. Let's have a look actually. Yeah, it's just nothing here. Pound yen, I might close out of this one after the stream, depending on how this level holds up, because the trade was taken due to this S3 level. So if we end up breaking below these lows, I'll just accept the loss and take that one. Pound dollar is correcting. I think it was PCE we just had, wasn't it? Was it PCE? I should double check. Again, a little bit out of touch at the moment, which is not that professional, but it's the truth. Yes, it was PCE. Same with euro dollar, having a rejection. Copper, silver, yeah, there's just nothing here. USD JPY now major. Anton, I've got no idea what you mean by that, unfortunately. Actually, let me just check the time, make sure I'm not running over here. So after me, we have got Chris. Okay, cool. So I've still got 20 minutes roughly, which is fine. I bought New Zealand Swiss at 5329. Can you check if there is still room for the upside? Yes, I can take a look. But keep in mind, just because I think something, it doesn't mean it will happen. Oops. So okay, so you bought at let's see, what was it? 5329. Honestly, I'm not sure. And the reason is we've got this level here, and we also have this 200 moving average that's coming. So, you know, technically, this doesn't look very good just because of the daily time frame. The weekly looks great. The H4 is on an uptrend. Yeah, if I was you, I'd be very careful with this position. But again, I'm not saying it won't work. You know, after, you know, when I've left this stream, you might go ahead and hit take profit. I don't know. But yeah, my perspective is I'm not very keen on this one. But if you took it for a reason and that reason is still valid, then stay in the trade. I love the new vid. My CAD yen trade was the exact same outcome. Good stuff. Yeah, I think those yen trades were pretty straightforwards. It was just a case of checking the time frame, really. Check your pound Swiss. Yeah, pound Swiss. Oh God, has it gone to stop loss? Yeah, it's heading there, isn't it? That's fine. It is what it is. pound yen. Yeah, it seems like the pound's taking a bit of a nosedive at the moment, which is fine. As I said, I've had a very good month this month, so if I have 1 or 2 losses to end the month, that's fine. Not an issue for me. I'm in AUD CAD long on the daily, currently trailing stops. What's your thoughts on the pair? AUD CAD. Well, you've caught a bit of a rocket there. So let's see. I think, to be honest, you've got pretty clear traffic here until sort of these highs. So around here would be where you start to maybe face some trouble. But yeah, until then, to be honest, I think you've got it pretty easy. It just, yeah, trail your stops, secure profits. And yeah, let the winners run, as they say. What do you think of US 30 shorts? I'm fairly sure we just hit new all-time highs. I'm not sure why you'd go short. Yeah, I mean, for me, there is nothing here to signal a short. I could maybe understand if you had, I don't know actually, but if you had whatever your entry criteria is, and maybe trying to take it back into these previous highs, then maybe I can get it. But still, I'm not sure shorting the Dow here is necessarily a great idea. You haven't done a US 30 short, just looking for one. Okay, well, if you were looking to go short, I think you would have to do it on small time frames. You would have to really look for sort of a day trade or a scalp. I think if you're trying to swing trade a short, you'd be in for a world of pain, really. So, in fact, I don't even really know. I'm not a reversal trader, so I don't really know what you'd really want to look for here. I said really way too many times, but I guess I'd be looking for basically the same way I always trade, which is this break and retest, or rejection and retest, I guess, in this case. So I'd be looking for a closure below the highs, the retest of this resistance, and then a continuation to the downside. But again, I don't trade like that, so that's a very primitive coverage, I guess you could say. So yeah, this looking like we're in a little bit of danger on this one. I don't think any of my trades are actually in profit at the moment, which is a little bit sad. So, actually, silver's doing quite well, but pound yen continues to drop. Pound Swiss is dropping. So yeah, let's actually take a look at the pound. Let's see what's going on here. Nothing too violent, really. I'm still quite confident to say we can reach these levels at least until 13619. So I'm happy to hold on, but yeah, we will have to just keep an eye out. So how have all your weeks been? Have you made some money? Have you lost money? Are you break even? Did you learn something? Actually, where was I've lost it. Hold on, let me find something here. I had a currency strength meter that I was watching, but I seem to have lost it. That's annoying. There we go. So if we look at what's going on today, yen is in the lead quite heavily, continues to outperform. It's interesting, really. You can see how poorly it was doing right before, and then it was just a very, very sudden snap. And this happened within, this was at 7:10. This happened within sort of 10 minutes. And then the spike took about 20 minutes, roughly. In fact, no, 10 minutes. Yeah, about 10 minutes. It's crazy. It's crazy how fast you can get chopped up in the currency market, in the financial markets in general. anyone that was stuck in long positions against the yen would have been likely chopped up here with very little regard and very little time to manage the position, which is fascinating, really. So what do we have? We've got the Swiss is doing quite well also. What's the weakest one? We've got the Canadian dollar currently lagging behind. We've got the pound also lagging behind, actually. So I guess I'm breaking my own rules there, trading pound against yen, opposite strengths. I learned that you could change your bias from bearish to bullish or other way around according to price action, higher time frames. Interesting. Fair enough. If that's working, then fair play. Ex-defense leader Ishiba to become Japan's new leader. That is why you see pairs versus yen bearish reaction. Yes, exactly. But it's fine. I think, again, this is a day trade just playing statistics rather than economics. So it doesn't work. No problem. But yeah. Yeah, it's just one of I guess it's those moments really where you look at the markets on the sort of daily time frames, the H4, the weekly. It's more hindsight trading. If only I got in here, or if I was only looking at this position, or if I was only at my desk at this time. Because you know, I was looking at New Zealand dollar, clearly didn't take it, and very similar to a lot of the other currencies, I just didn't get into them. I've missed loads of opportunities recently. I think it'll work out of your bullish trades because yen at the moment is dovish, especially with UA to speech. IGIFX. I like the way you think. We have the same thing. Plus it's Friday. Yes, exactly. We'll see some profit taking today, as we generally do on Fridays. And it's also not just Friday. What else is it? It's the end of the quarter. So we will have profit booking, or likely we'll have profit booking. So yeah, that will be interesting. UAD JPY active by time zone now. Anton, you keep saying these things, and I don't know what you're talking about. I don't mean that in any rude way at all. You just keep saying things, and my brain just isn't connecting what you're saying to the English language. That might just be me being stupid, by the way. I'm not trying to ridicule you at all. But yeah, it's interesting. I was talking to one of the traders at Elite Traders this morning about these streams. I always find them very interesting. And it's not just because I get to sit here and talk to you guys, and sometimes we can have some fun, and then other times we can make some money together and things, but because we can learn things. So for example, when I'm sat in the back room waiting to come on, I might hear something I'm like, oh, I didn't realize that, or I forgot about that. It's a good point. And it's like a big thought bubble where we can all bounce off each other. I think it's great. No JPY is bearish, bounced off daily order block. Yeah, sure. I don't trade order blocks, so I'll take your word for it. But yeah, I think I'm going to just cut this position now, which is unfortunate, but that's the way it goes. If we can hold below, which it looks like we will, we've got a minute left on this candle. But again, it's fine. Already secured 3% on this long position, so a smaller loss isn't a problem. It's about right trading attitude, exactly. So I'm just really trying to think if there's anything to cover, and unfortunately, I just don't think there is, because the markets are very the markets have kind of done what I would expect them to do. So it's like, well, they're just going to continue. All I trade is JPY. Trust, lol. Yeah, fair enough. As I said, it's not the way I trade, but if it works for you, then that's great. And wait, actually, let's see. Let's get educated. As I was saying, it's good to bounce ideas off each other. So a daily order block. I assume you mean this. So for me, the way I look at this is not an order block, because personally, I just don't agree with the definition of what people say order blocks are. I would look at this more as just a previous level of structure, and it's just, I mean, it does the same thing. It doesn't matter on what I think of the definition, which is why I had my take profit here. So I do agree with the idea that, yeah, I mean, it's engulfed the past 3 daily candles in one day. So doesn't really matter. How come you're cutting trade short? Isn't that what your SL is there for? Jay, yes and no. That's a good question. So I'll cut trade short in situations like this. So the reason I took this trade is because the statistics are on my side. So S3 has a 90% chance. Oh, sorry, I should say, when price reaches S3, there's a 94% chance that we'll close back inside S3. So when I saw these rejections, I thought those statistics come into play. I'll take this long position looking for the correction of this move. And if those statistics don't hold up and this level does break, then clearly that 6% chance of it not working is one of these times. So I'm not going to sit in a trade that's no longer valid for my rules just because of my stop loss. Whereas there's a different approach there. When I'm in a trade because of economics, then yes, I will let it hit stop loss because it's not a price action driven trade, whereas this one is. So I have to be aware of why I'm trading the way I'm trading when I'm cutting losses or taking profits. Yeah, John, they're not cutting rates. They actually hiked, and now it looks like they're holding for the time being. What indicator are you currently using? This one is something I built. It's not public. It's just pivot points. And it sometimes signals entries, but it's essentially just an automated version of a trading view version of, it's frozen, of the indicator I use on MetaTrader. But yeah, it's just to show pivot points. Nothing crazy. You can get pivot points everywhere. Are you cutting rates on the dollar? Yes, no, it does. I apologize. I thought you were talking about the yen cutting rates. UJ looks interesting from the 15-minute, retesting that structure. UJ, where is that? Here we go. Yeah, I'd expect a lower push on here. I would expect sort of here. And the reason is because although there is structure here, there is still, oh, wait, let me leave that there. So if we do bounce off here, it still leaves this sort of gap that needs to be corrected, in my opinion. So normally when I'm trading a reaction from news, I will look for the full move to get corrected. So for example, if I was going short here, oops, sorry, wrong way around. If I was going short, stop loss would be here and take profit would be right here. It wouldn't be at the bottom. It wouldn't be at the high. It would be right here. And that's just, yeah, again, there's not any reason for that really. It's just from experience. I've seen that's, yeah, just sort of the reaction I'm used to seeing. I'm talking about the 50 basis point cut. Yeah. Pivots on 24 hours past data. No, it's not. Well, actually it is. I guess you're right. So daily pivot points are based on the previous day's data. Yes. However, they hold up very well. And it's not, it's not something I've thrown on my chart and started using. Pivot points have been used on trading floors for years. So it's, and as I said, the statistics are already made. It's not something that you can really argue against. If you don't like them, that's fine. But you can't really say they don't work because that's just statistically not true. So we've got 10 minutes left and I've kind of just been yapping for the past 15 minutes. Let me have a quick think. What we've not done, actually, that we normally do is go over the Edge Finder. We see what's on here. And we can see, so we've got Swiss yen is the most bullish reading actually, which is interesting. As I said, the Swiss is quite overvalued. However, it's expected to be sustained in the near term. So this could be quite good if we can start seeing the yen depreciate in value. New Zealand dollar, I mean, that's already rocketed. So we'd really need to see a pullback on there. New Zealand yen, probably not one I would take. Pound Swiss is bearish, opposite to me. Euro CAD, S&P, Euro New Zealand, that's fine. I guess the most interesting ones here are the Australian dollar Swiss and Euro Swiss. So let's take a look. AD Swiss. So actually, I might take this. Probably not today, because I don't really like to get into positions on a Friday unless I'm, super confident. But yeah, I don't mind the look of this one here. So let's just have a quick analysis session here. The fib doesn't work, unfortunately, because we've already broken through that. So we're going to have to rely on structure. So the way I would approach this is one of two ways, or I expect one of two things. So either a break, a push to the upside, retesting this previous level. So this would be basically the break and retest, or from here we just reject and come to the downside. To back up this trade, we obviously have resistance, and we have a next level of resistance here. This one actually goes back a little bit further through here, which is nice. We've got the 200 moving average. Let's see, the RSI on the daily is also quite extended. So yeah, I like this actually. We've also got, as I said, the edge finder is bearish, seasonality, COD data, GDP, manufacturing PMI, services PMI, retail sales, inflation. So generally speaking, that's pretty nice position to the short side. So on Monday, I might take this position, have a stop just above here. I think that's really the only way, unless we see today's candle close higher, and then maybe on Monday I'll enter here. But either way, I'm quite happy to start possibly taking some short positions. Just thinking here. Yes. Yeah. Okay. I think Australian dollar Swiss can get added to the watch list. There was another one as well. I think it was Euro Swiss that was reading bearish. Yeah, I quite like this. I've just lost my moving average, but that's okay. Yeah, I like Euro Swiss as well. So we've got quite a nice support down here. There's not really enough room, in my opinion, to make this a swing trade. It's for a stop loss and a take profit, because this would be, I guess you could get a sort of a 1-to-1 here, but really I'd like to at least go for a 1 to 1.5. So I might take this on maybe the H1 or the H4 and make it more of an intraday position. So hypothetically, something more along these lines. Obviously, depending on where the entry is on Monday, it might be something like this. Wow, your list is massive. I've got 5 pairs on mine. Yeah, well, this is everything I swing trade. In fact, it's not even everything. I'm missing a lot of the commodities. And then on here, this is all my intraday. This is my intraday list. So this is what I watch for sort of day-to-day stuff. And then when I'm analyzing on a Sunday, I've got the list here for longer term things. How wide is your SL normally? For day trades, so for positions like this is pretty standard. So anywhere between, I mean, actually this is GJ, so the pips are a bit different, but normally sort of 20 to 40 pips on a day trade. For a swing trade, it can be anywhere between 100 to 200, maybe even 300 pips, depending on the specific trade. So let's also look at what COT is doing and seasonality, sentiment. Here we go. That's interesting. The ZAR is overtaking gold. So previously gold was being bought the most, been overtaken by ZAR. Silver is just behind, which is quite nice. I'm still in silver long, so that's a good sign. The yen, Dow, Nikkei, interesting. Okay, maybe I need to start looking at some ZAR pairs. I've never traded the ZAR actually. It's one of those things that's just never really popped up on my watch list. Is that a beer? It is a beer. It's 3 p.m. on a Friday afternoon. I'm here hanging out with you guys. I think a beer is okay. In fact, no, I don't know. Is this a PG-13 stream? I don't know. But if it is, it's just juice. It's just big boy juice. So retail is long on oil. Of course they are. Iron ore, dollar Swiss, euro dollar mainly short, actually, which is interesting. Yeah, there's not a huge pattern here that I can see. Oftentimes with retail sentiment, you'll see retail buying, for example, all the commodities, or buying all of the indexes, for example. Whereas here, it seems a little bit different. So you can see UK 100's getting shorted, DAX is almost 50-50, NASDAQ's getting shorted. Oh, actually, I've just proved myself wrong. Dow is getting shorted as well. So yeah, you can see I completely missed this little cluster here. Anyway, it's Friday brain. Give me a break. Any explanation on the yen? Yes, they've had a change of leadership and CPI came out. Overall, I'm still bearish. Still bearish on the yen. However, when will we get that bearishness is a different question. So I'm more looking for these highs around here. So you can see 70.90 and 72.48. If we can reach those levels, I might start looking to take some more long-term short positions. So for example, I might take pound yen long on a swing trade rather than a day trade. But again, I don't know, to be honest. Trading is one of those things where if I can't, how do you explain trading in those terms? It's like a difficult mess of a jigsaw that you've got to put together. And sometimes those pieces are just missing under the sofa. And that's the way I see the yen at the moment. It's like, I view it as bearish, but I just can't find that sort of catalyst to actually get into that more serious short position or the timing. How about AUD, JPY? So actually, Australian dollar yen, in my opinion, would be one of the more bullish assets. And the reason is, as I said, I'm still pretty bearish on the yen. But the main thing here, or the main factor for me, is the Australian dollar. As I said, the Australian dollar, the Australian economy is driven very heavily by China and commodity prices. So we've just looked at gold, we've looked at copper, looking at silver, look at natural gas. All of the commodities are on a rocket ship. So that's good for the Australian dollar. China is getting stimulus, good for the Australian dollar. And again, pretty bearish on the yen. So overall, I actually do really like Australian dollar yen to the upside. But the thing holding me back from the yen is just the MOF and the BOJ. So I don't know if we'll get another intervention. I don't see it likely, actually. The yen is doing okay. I don't see that would be on the table. However, the MOF don't give any warning, and they seem to just do it. So it's just one of those things, back up here. I was saying, be very careful. I think an intervention's coming. I don't know when, can't time it. Could be next year, could be next week. I don't know. And then a week later, we did have that. And obviously it was just this. So in the grand scheme of things, it was very small. But it's just those things with the yen that, for me, just really put me off holding it for a longer period. It's best to wait for next week to trade XXX yen pairs since move has been made. Yeah, if you're not in a position already, I wouldn't. I don't trade Fridays for long-term positions. I will take a trade on Friday morning for a day trade like I have done here, if the setup is good enough to warrant a Friday trade. But yeah, generally speaking, Friday, I'll take the day off. Well, take the day off from the charts. I'll do some research, get on stream, or do other things. Speculation on price fluctuation. That's his trading. That's a great way to say it, Anton. That's very professional. There's speculation. How much percent do you put into one trade? You know what? That's actually changed the sort of this past week. So normally I risk 2%. That's sort of my baseline. But this week, because I've just moved to a new account and it's on a PAM, so I've got people following the positions, I don't want to over risk for them. I don't want a Dumbo situation. So yeah, I've reduced my risk to 1 to 0.5% on trades. And consequently, I've had my best month ever. I think it's more of a psychological thing. I think it's because if I'm used to risking 2%, for me, if I lose a 1% trade, that's only 0.5%. So I'm not, this probably is going to sound bad. I don't mean it in a sort of a bad psychological way, but it doesn't give me that feeling of taking a loss. So I'm not that worried about going into a trade, taking the loss, and then re-entering if I still like it. Does that make sense? I'm not sure if it does, but that's the way I see it. So I think it actually gave me a little bit of a confidence boost, but not in a negative way. I'm still obviously following rules and strategy, but there you go. And it's also a very small account. It's only got $2,000 in it. So really, a 1% loss, what's that? $20. It's fine. Anyway, guys, I'm over time. I've just realized I'm almost 2 minutes over. Chris, I'm sorry. Guys, have an amazing day. Have an amazing weekend. I appreciate you all being here. Don't go. We've got Chris coming up. Chris, have a good stream. A1, guys, thank you very much. I'll see you all next week.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Friday. How we doing? I'm just getting a couple of screenshots posted, doing some add-on trades to my China plays. Let me log in back to my broker platform. It was being a little slow this morning, but I got filled on 2 additional credit spreads on Baidu and Alibaba. Premiums were pretty solid, and I just put in a 110 by 105 on Baba and a 110 by 105 on Baidu. Collected 255 and 275. Yep, 255 and 275 credit on those trades. So going after a little bit of additional income on those plays with some credit spreads. I'm going to post that in Discord. So I have it right here. I'm just going to put it all under one trade. So in the A1 Trading Discord under the Chris's Trade section. If you don't have the Chris's Trade section, there is the Pulver Alert package if you're interested. I think the team will post a link to that. So I'm just getting logged back into my broker platform here. This will be under Stocks Options. I'm going to put these together with 2 screenshots. Let's go, let's go, let's go. So here we are. This is a Baba and Baidu combo credit spread. Alibaba is the 11:15 expiration, 110 by 105, and 255 credit. And then Baidu, 11:15 expiration. Same leg, surprisingly, but works out pretty nicely, and premiums are pretty solid. All right, so 50% take profit or 90% take profit. All right, so get that posted in my trade section. Post a couple of screenshots. So here's one for Alibaba, and here's one for Baidu. All right, trade is posted. Overall, again, pretty happy with the week. This might be, one of my more favorite weeks because it's only a year of planning that's finally showing some signs of profit. So up to a fresh watermark high. Now it's a so far so good for the year, 234K, up 24K on the day. A lot of that is still being led by China. Also had a pretty good win streak this week. So 12 of 13 winners this week in just SPX and SPY. And also I'm looking at, if you're interested in this trade, I posted this morning. It was kind of a bonus trade for my daily profit play members, but I'll put this one in for index trades. This is going to be a SPY 930 expiration, 570 long put. Let's see what it's trading for right now, because you probably get a better price than I did. So I took a trade this morning around 91 cents. So if I go SPY right here, 570, I got filled for 90. Where's it at? I got filled for 92 cents, and I've already got it set for $1.77 credit. If I look at the trade itself for the 30th, right now it's trading for about 70 cents. So if you like the trade, 70 to 75 cent debit. I'm targeting a 570 SPY strike price and looking for $1.75 credit or higher. So the trade I'm looking for is going to be based on this screenshot right here. I want to see if price will move down to that level. So 570 long put, 70 cents debit. And then I filled at 92 cents debit. And that's because I took the trade earlier and price is still trading the same way. So I'm putting it out to Monday. So it's end of the month, end of the quarter, to see if price actually makes a similar move to what we saw yesterday, which was up near the highs, and then it fades off those highs and it comes back down to the same lows. I'm still willing to risk 100% of this trade. So if I lose 70 cents or lose 90 cents, it's not a big deal. But I like the gamma squeeze that's lining up right at that 570 strike like it did yesterday. That was a 90 cent debit that turned into a $1.80 credit. It was trading for as high as 220 at the lows. But anyway, that's the trade. So I'll post that screenshot as well. There's the trade. And that one's going to be under the index trades section. Okay. So active on the SPY, active on SPX, in and out for some profit. We catch some comments here. Whoa, what's up? Very quickly, did I just lose everybody on the stream? Nope. That was weird. I'm just going to keep talking. Somehow my screen just went black. So let me see if I lost anybody on the stream. I think my computer might be flaking out after putting it on sleep mode all week. Let me double check this one. Chandler, I might be double dipping here, but let me find out. I'm back into the studio. Okay. So I'm still talking. That's good. Chandler, will you hit me up in Discord and just let me know everything's coming through loud and clear? My screen on StreamYard just went black. So I'm just either talking to myself or we're good. So I will continue as business as usual. China has just been absolutely cranking this week. Looks normal from our, okay, good. That's just weird on my end. I think my computer just needs to be officially shut down. I've been doing so much stuff this week after markets, like doing a lot of strategy testing and content. And anyway, so I've had my computer literally in sleep mode every night, and I've got probably 50 browsers up and might be a little watered down. So probably a good shutdown would help it. But I'll get through the session. I don't want there to be any disruption. So let's go. China just continues to crank. The Hang Seng Index up 3.55. Baba's up 3.94. Baidu 4.28. FXI 1.57. K-Web up here 460. MCHI up 2.4. I have exposure in all these. I also need to add JD. That's another one that's actually been outperforming. So JD.com, add that to the bottom. It's up 3.96 today. That is part of the reason that, you know, my returns are pretty darn solid today and pretty much all this week. So where I am at, let's talk Alibaba. Currently up around $12,000 in Alibaba, and have some shares, added some credit spreads, have some ratio spreads, have a bunch of credit spreads that are way, way, way lower. That hopefully that's just additional income. Baidu, have the shares up about $7,200. Have credit spreads, have ratio spreads, have covered calls at 125 and 130. And I mean, if it starts, we're up here to 106.70 or 106.80. I don't know if we're going to rip all the way up to 125, 130, but I do want to see what that price looks like. So my first target on Baidu is way the heck up here. So I mean, I've got a 125, 130. I'm not saying that price is going to rip up here to 160 by the end of the year, but I certainly want to try my best to get out of the way. Now, if I get returns at 125, 130, it's obviously not the end of the world. I mean, I own this thing in the 90s. I think Baidu I own at low 90s and $89. And so if I get called away at 125 or 130, that's fine. I'll just reestablish more income plays. So far, so good. And yeah, it's no complaints whatsoever. It's just really just I don't love buying highs, and so I put on these fresh trades to do a credit spread for this reason. Here's going to be my plan. So if price is just ripping the way that it's been ripping, and we pause here for a bull flag, you know, I'm looking to see if we just have more continuation. But if we see an aggressive rip up and an aggressive pullback, I will debate if I take the 110 by 105. What I might end up doing is if we pull back, let's say to $100 or $90, I mean, that'd be a sharp pullback. But if we do that, I might end up taking the shares and then doing a quick repair and just adding to my existing position and just adding covered calls or just holding the shares, because I think this is still where I'm looking to go. If this is a double bottom, this is the center high, we double that move. I mean, this could be a $250 stock. I hope that it is. I think that'd be awesome. And of course, I'm trying to stay out of the way if this thing's going to continue to run. So I'm looking at just adding some income plays, because if the price wants to go up and I'm adding in credit spreads, I can still generate income even though I'm not adding more shares necessarily, because I already own them. I have shares of Baidu, I have shares of Alibaba, I have shares of JD. So all these are looking pretty good. What else? FXI. FXI right now is up about $6,600. I have some shares, I have some credit spreads, I have some ratio spreads. It's the same thing. I've been sitting in a lot of these trades for a while. I'm not saying I'm smart. Okay. I'm saying that I've been patient, and that patience is paying off, which I'm obviously happy about. But the nice thing is, it's not like I look at it and say, okay, time to take profit. This has been, to me, like a huge position that's been in the works. And so I've had about 3 to 5% of my portfolio allocated to this. I mean, what's crazy is, you know, take a Michael Burry, for example. He's had about 35 to 50% of his portfolio at any given time in the last year and a half, 2 years allocated to China. And now, I mean, I'm sure his whole fund at whatever he's trading billions of dollars is probably freaking ripping, and he looks like a genius, you know. But the guy was taking on heat and taking on trades when everyone was saying China's uninvestable. Nobody knows. You can't trust it. The data, they could get delisted. It's like, I get it. It's risk, you know. All right, just got a break-even trade on the SPY. Good. So that eliminates Q's took profit yesterday. SPY got for break-even or better. And I mean, honestly, SPY is looking like it's trying to go a little bit higher. But I'm just playing it off of yesterday's high just in case. So my 960 break-even is good. So that's this trade right here. I go on the SPY. And sorry, I can't catch any comments, which is odd, but I'm just going to be pretty much talking to myself. So Frank, if you come on, hopefully I can hear you. I'm still like blacked out on my end. So let me see something else. I'm going to get rid of all my browsers are gone from that side of the screen. So let me try one more thing. I'll just mute. Let me mute the stream. Give me a second. And then Chandler, let me know if I do this, if I mute myself and come into the studio, let me know. Oh, fudge. That's an echo on my end. All right, I won't do that. So I just don't want to mess up anything. If Frank joins me, I hope I can hear him, but I might not be able to with my screen going black. So anyway, I do have a hard stop today at 11 o'clock, by the way. So I'll go as quickly as I can. And 11 o'clock, I'm out of here. But the SPY, this was a trade that I'm going to update for my, where'd my Discord go? There it is. So Discord, I'll go to the A1 trading. This should be under index trades. Okay, sounds good. Thanks, Chandler. If I go into A1 trading, should be under index trades. The Qs I took out for profit. Q, so this one's profitable. I updated that one yesterday right here. And let me just edit this one. Qs. So that was closed for $14 credit yesterday. Actually, let's put the money sign there. Because my profit target would have been like $16 or $17, but I got out a little bit early, which I'm fine with. Okay, so there's that one. And then my SPY trade, similar, but I got out of this one for $9.60. I just took a break even. Now, it could go up a little bit higher. I still have until the 4th, which is next Friday, but I'm just taking the trade off at break even. So I'm going to edit this one and say update closed at 9.60. So break even result. The QQQ closed early for nice profit. SPY is stalling at the recent highs, just taking the break even result. Okay, so break even will be a thumbs up as opposed to a money sign. And then I'll do a reply here at the bottom for the SPY. Ah, fudge, I lost it. Qs and SPY. So let's edit, reply. SPY 10-4 expiration. Bull call spread by bear put spread for a 960 debit. Closing for 960 credit for break even. Because the QQQ broke higher and closed for a nice winner. SPY credit price isn't doing the same thing. Okay. And then the last trade I have in that same type of batch was NVIDIA, NVDA, and it's trading right now at 120. We were up as high as 127. Micron is another one that I get to keep an eye on today. Come on, Micron, you freaking turd. 106 is my sell side. Actually, it's my buy side because I did the kind of the iron butterfly. Let me check on Micron really quickly. This might be 1, 2, 3, 4. I mean, there's nothing to do on Micron. It's either going to settle for a loss or Micron drops all the way back down. We're trading at 108 right now. The reality is on Micron, if price comes back down below 106, I have potentially a full profit for the $6.50 credit because it stays within my legs. Because I sold the body and I bought the wings. So iron butterfly. And obviously it blew through all the levels, and this is what the chart looks like. But I have a chart alarm set here at 106. And so if we go today below 106 and it stays there and closes at like 105.99, 105.95, anything below 106, I can keep this entire credit. So I'm willing to take the full risk on the trade. I need price to cross below 106. I'll be looking to see where this closes at the end of the day. Whether this is a win or a loss, we'll find out. But I'm going to take it all the way to the final bell today. All right. Okay. If there's any pressing questions, Chandler, if you wouldn't mind giving me some questions, that would be, if needed. Let's see. Today, calling the top. I'm just seeing Frank's comment there in Discord. All right. Peloton, I had a good talk about this one yesterday at the final hour. Anyway, so that's Micron. That's what's going on here. Let me check in the broker platform. What other expirations do we have? I'll do some analysis. I have a couple of E-mini futures trades, which futures was up overnight. So ES is up on the day. NQ is down on the day a little bit softer, just kind of oscillating, but SP or ES is up slightly. Dollar yen. Okay, I can take a look at that one. So let's look at the currency strength chart for today. Hey, what up with that dollar yen? Holy shnikes, that's a crazy move in the AM at 2:20 Eastern time. So it looks like the Japanese yen is back to doing its own shenanigans, whatever the heck that is. So yen pairs getting beat up and whipsawed all over the place. I mean, I'm telling you, how many of you are having fun trading the dollar yen out there? Or how many of you are having fun trading the yen in general? Because you don't see this type of crap in Forex all the time. And this is such a radical currency pair. This is why I just think you can make more money not trading Japanese yen. Because how do you predict this? You don't. Like this type of order flow and that type of volatility is so freaking random. I mean, that's a 220 point swing in a day. It's absolutely nuts. I mean, it just massive wick high, massive wick low, just crazy move there. And why? Like what was said overnight? Anything from Financial Juice with the yen? Let's see. Euro World Cup. Let's go JPY. Is there anything? Slides further. Shiba's victory and Prime Minister. Oh, we had an election. And click on this for FX Street. Is that what happens? Let's see. Falls further to 142.50 on multiple headwinds. Shiba's victory and Prime Minister elections has strengthened the Japanese yen. Cooling U.S. inflationary pressures have weighed on the U.S. dollar. Okay. I mean, it's not just the dollar. I mean, the yen has come out swinging with a lot of strength. Sharp rally in the yen suggests market participants expect the victory of the new Prime Minister Ishiba to be favorable for further interest rate hikes in the Bank of Japan. Ishiba told Reuters that the central bank was on the right policy track to rate hikes thus far. Sharp weakness in the U.S. dollar has released a softer than expected U.S. personal consumption, so PCE for August. That's old news. That wasn't today. Annual PCE is decelerated faster to 2%. We'll see if inflation gets sticky or not. U.S. dollar was tracks the greenback. So let's look at the Aussie yen to the CAD yen to the Swiss yen, which I'm still short, by the way. Actually, that worked out pretty well for the Swiss yen. Hopefully, there's more to come. Get back to these 165 lows. To the euro yen, to the pound yen. Pound yen came right back up to that 5055 area. Not a bad spot to look for a sell trade. I mean, this swing is kind of the real deal. Like having that election, I'm putting that out there. Like there's news that happens that kind of lines up perfectly in the Forex market for some type of technicals. I just don't like the idea of if you wanted to short this 5-0 with a stop loss above, you better take a tiny trade size to incorporate whatever that risk is. Because you're looking at like a 1,500 pip risk. So if you're trading a micro lot, you're still talking about $150 risk, and it just depends on your account size. But a lot of traders start with $5,000 accounts, $2,500 accounts. They use a crazy amount of leverage. They blow up their account a bunch of times. I mean, you can trade small and take controlled risk, but it's just, I don't know, it's nuts. And I think this type of order is just wild. Like, how do you get this type of behavior intraday? And how is this not on the calendar? Did anybody see this happening today? I didn't even know this was happening. So Thursday to Friday for this week. Was this even on the calendar? Tokyo Core CPI. There's nothing on here with elections. Okay, whatever. So all we had is low impact news today. We had U of M consumer sentiment higher than expected. Personal spending down slightly. The core PCE did come in softer, which is good. That shows like inflation's trending lower, so that's actually a good thing. But we're going to see what's happening with employment and inflation in the U.S. Dollar again pressing some lows. I don't believe this. I'm not saying I want to buy the dollar. I'm just saying this is a bear trap. If I ever did see one, this looks like a bear trap. So if I'm going to be a seller, I'm going to wait for this thing to make an obvious breakout, come back here and look for rejection and then sell it. Or make an obvious breakout, come all the way back here and then look to sell it. I am not trying to sell the lows on the dollar. If the dollar wants to drop and keep dropping, everything can be made up here. You can be long gold and silver and Bitcoin stocks. You can be long China. You can be long Japan. You can be long US. You can be long stocks. With a weaker dollar, it's going to help everything. So I think there's just better ways to trade than getting into the dollar crosses in Forex right now, because this is still quite messy. And even with this, you can see that, 2023, we had a fake out and it came right back up. And all of a sudden we posted, multi-year gains on the dollar. I mean, that trend was relentless until the Fed started to, talk about easing again. So anyway, I'm just not taking the bait on the dollar in case this thing is a little silly. All right. Let's go to some other instruments here. I did want to talk about what I put in yesterday. Copper trading up at 4.62. So on copper, I think copper could have a good opportunity here. If we have this big uptrend, we pull back, we create this little structure. This could be a head and shoulders trade. I'd like to see a pullback in copper and look to get long. The only issue is I may not be able to trade the futures market the way that I want to. There's other ways to trade it. I can obviously trade, like FCX is a Freeport McMoran. That's a copper producer. Rio Tinto, copper producer. These stocks have ripped pretty nicely from $40 to $51. Will we see a gold dump? I don't think so. I mean, I want a gold pullback, but I don't think we're going to see a gold dump. I think silver looks still really good. Technically, I think gold is just drifting to all-time highs, and if it pulls back, it pulls back one way. I talked about this yesterday in my final hour session for gold. Anyway, let me look something copper real quick. So HG copper futures right here trading at 4.6. If I go to my broker platform for copper futures, let's go /HG. I want to see if there's something I can trade in copper. If I go out to March of 2025 and I want to put in a credit spread, so could I do like a 4.3 low? So a 4.3 by 4.25. That's if I get filled right now. I'm going to try to get filled at, what would it be if I took a trade right now? If I did an at the money, I'm going to get a ballpark here. So I should get filled for like 0.28. So I'm going to try to get filled at like 0.25. This pullback here is around 4.32. So 4.32. Let me see if I can get filled for a 0.025. And what does that look like? So I'd make $625 and I'd risk about the same. This is out to March 2025. I'm just thinking, so I obviously want to see price pull back a little bit and get me a better fill versus getting in now, because I'm not taking the higher risk. But if copper just keeps going higher, I'm never going to get filled on the trade. If copper pauses and pulls back, then that order gets filled. I have defined risk, and I just need price to go higher. And this is a play on global demand. I mean, AI needs copper. EVs need copper. Computers, houses need copper. So I think right now it's it's the same thing with uranium. I'm long uranium for supply shortages. I'm long copper for the same reason. I'm just trying to get a good trade. So I'll go ahead and place this trade. A 4.3 by 4.25. I'm going to try to get 0.025 in this trade. And it's only tying up about $400 in buying power. It's a 1-to-1. If I win, it's 625. If I lose, it's 625. So I'll take the trade. Let me send this one out here. So pending order on copper at 0.025. Okay, let me place these really quickly. All right. So just a couple more accounts. And I will add that into my alert service in Discord as well. Not replace, not replace, don't replace. Let me see, did I do it for this one? Yes. This one, I did not. Hang on. So pending here, not pending. Got it. All right, so I need to do one more count. Similar, and there. Okay, so I'm placing a trade on copper. I'm looking for 4.3 right there. So we have all this upside with a pretty tight stop. It's risk defined. So that's a March 2025 expiration, 4.3 sell put, and a 4.25 buy put. Yep, that's correct. And I'm looking for 0.025 credit, 6.25 reward, 6.25 risk, 50% take profit to 75% take profit. So just a little bit of elimination of the potential outlier risk, but we have to see price pull back first, and I'm looking to get in. So I need to see price pull back, which I can draw that right here. Price pulls back, then we get filled, and then price can go up. Gold. Someone's asking, will gold dump? Let's take a look at gold. So XAU USD, here's an easy way to look at it. If I take my 200, 100, and 50 moving averages, you tell me if this looks like a healthy bull trend. Are we in an uptrend in gold? Yes. Have we found support several times along the way? Yes. Right now, this is a pretty aggressive bull market where if all we had price come back to is a 50 moving average, I would still consider that an opportunity to get long on gold and add to the position. If we pull back, obviously, to a 50 or a 100 and we pop back above those, that's a good looking trade for a buy the dip. So I'm pretty eager to add more to gold if I see price pull back. I hate saying it, but I'm probably not adding to these highs. And that seems stupid if it's like gold has a pretty good track to get to 3,000, but man, it'd be nice to get a freaking bull flag. It'd be nice to get a pullback and find like even the light 50 period would be fine. So I'm just going to wait, because if something happens on the dollar with the lows and the dollar whips up for a second, maybe gold pulls back in a spur of the moment trade. I don't know. But if we pull back to the 50, I'm probably putting on a credit spread for gold futures or GLD. And if it pulls back to 100, same thing. Pulls back to 200, same thing. So this area, I'm looking to patiently wait. I know that if price goes higher, I'll still treat it the same way. If the 50 period moves up and the 100 period moves up and the 200 moves up and gold just keeps going, and then finds them, well, I'm still looking to see if it goes up and, we can buy the dip, so to speak. So a gold dump, no. I think gold is still pretty well built in for higher highs. There's a ton of demand for it. It's a great play against weakening currencies and debasement. Bitcoin's doing the same thing. We're up to 66,000. Bitcoin's come off these 50K lows pretty nicely, and everyone's kind of wondering here, like, is this the big breakout trade on Bitcoin? Does it break above 70,000? Can we get above all-time highs again? Yes, no, maybe. I'm not sure. But it's looking certainly a lot better than it was back at 52,000. Hey, see the stream again. My browsers are coming back. That's so weird. And then Ethereum also behaving. I have a chart alarm set here with that recent break we saw back in August. My Ethereum credit spreads, if we get up above this level, those are looking for some full profit as well. So that's a trade into the end of the year. I'm trading EETH, and I can show that right here. Let's go all accounts. EETH. So currently down about $1,000 across the board on all the accounts, which isn't a big deal. We get above my strike prices, then we're in some good positions here. So I have a 60 by 50 credit spread, and then I have a 45 by 40 and a 40 by 35. So I've got a little exposure there just on defined risk. But if I see price getting back in to fill this gap on EETH, or price on Ethereum actually coming back above 2814. I mean, Ethereum looks a lot better, not just holding this level and holding this level, but rather getting above this 200 EMA again and breaking this trend line and actually trying to recover back up towards these recent highs. So if it's above this level, that's where profit's looking a lot better, and there should be a lot less risk on the trade. Okay. That is some Bitcoin, some Ethereum, some gold, some silver. Oil still having some woes and struggles. We're green today, but we had a pretty nasty sell-off with that Saudi Arabia news. 67.93. I'm looking to see if price just kind of stabilizes around this 65 to 67.50 area. I'm still looking at like credit spreads, but I might just stay out. I took profit on that 65. It was like a 65.50 by 64.50 CL credit spread that ended up making like $250. And I'm good for that right now. And then I've got some exposure on. I've got a long put at 55 and a sell put at 65 that I'm just going to kind of sit on and wait on for right now. Okay. All right. What else do we have here? Copper added the trade. Let me get that into the Discord before we go. The Nikkei is also just flat out ripping. I don't know. Don't be surprised if this offers up. I wish there was a better way to trade the Nikkei, but this could be a really nice cup and handle pattern where we have that nasty flash down for 27%. We rip all the way back up here, pull back. That breakout right there, if it holds, which it is because the Asia session is done, if that's a cup and handle, symmetry is right here to all-time highs for this first push. So symmetry is right here towards 43,000, and the cup and handle pattern is a measured move up to 46,000. So, this to me, if we're going to see all-time highs again on the Nikkei, this is another reason that I'm not necessarily looking for Japanese yen strength. Not immediately, but this also could be something where it doesn't take out the highs. Maybe we have this type of high-low swing, and then we have this market coming up here and then stalling, and it becomes a bit more of a resistance zone double top, and who knows. So Japanese yen stuff can be really, really slippery. So I just say that please be careful. They can be wild and crazy. All right, I'm back, by the way, with all the chats and stuff, so I can see your comments. How do we get you live directly every morning? So, I mean, I'm live here every morning. I'm also live with another service I run at 9 a.m. Called Daily Profit Play. That's in my Discord channel, and then I'm live on my YouTube channel and Twitter and Facebook and stuff in the afternoons around 3 p.m. for a final hour. Have to search for you live. I mean, you know how to find me. If you're in my Discord channel, I go live and it posts up on my YouTube channel. Like the links are all right there. So when I go live, you can join. My Nikkei chart's a bit different. Well, are you in this? Is it the same signal or the same symbol? NI225. All right, let me get rid of these moving averages. It dumped last night. Not from what I see. Let's find out. Let's take a look at a couple other feeds. So the Nikkei 225, this one's the TradingView index here. Here's Nikkei USD futures, and then here is the Nikkei stock average. Let's see what this one looks like. I mean, that's a daily line graph. That's up on the day. It shows here 2.32. So, you're talking about the Nikkei? I don't know. That's not what I'm seeing. But point is, I mean, this is a pretty miraculous recovery. And look, China is Asian currencies are doing well. China has been ripping nonstop for the last 3-4 days and finally starting to catch everybody's attention. Like I said, I've been sitting in China for a long time, for over a year now. And, I've been just talking about it like maybe I'm the crazy one that thinks that there's a play here. And I've just been patient. And now, profits are rolling in nicely, which is great. So I'm not trying to be silly and chase it, but I still think there is a lot of opportunity to get long. I mean, I completely expect to see a pullback, and I hope there is one. Now, what I'll do here is with this 110 by 105, I've gone out far enough on the trade that if we go out, 45 to 60 days, it should give it enough time that if we have an up and a down and then we get back up to the highs, fine. If we go up and down and we get to all-time or new highs again, great. If we go up and pull all the way back to where this thing started to show these gaps, I might end up taking the shares and just closing out for my my long put I would close out for profit. I take the assignment and then I work the trade back up to all-time highs. So just saying. I think there's room for it. I mean, I zoom out of the chart, and this is why I've been patient, because this structure for me was built all the way back here in October 2022. And it has been a long time, nearly 2 years of waiting for this price to pull back and 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 give us something. It finally is starting to look better. And just this last couple of weeks, I mean, it is like ridiculous, but it's also essentially, imagine this. Imagine that Jerome Powell comes into the FOMC and says, we are so confident that we're going to go to all-time highs in the stock market. We, the Fed, are buying stocks. That's essentially what China did. They are trying to reassure the entire country that it's safe to spend, it's safe to invest in the markets, invest in real estate, invest in everything, and the government's doing it too. So the government's buying stocks, right? It'd be the same thing as like if the US government's buying stocks, if the Fed is buying stocks, which I'm sure they are. They just don't disclose that stuff, but they're coming out right out and saying we're buying stocks. And so it's almost like I don't know how long it's going to last. I'm not getting crazy bullish like longer term, but for the next probably 3 to 6 months, I will try to get as much out of this that I can. And if all I get to is a measured move, let's say we go from low to high and we get from higher low to higher high. If I hit symmetry, I'm pretty darn happy because these trades have been built for over a year. And if that rips from 80 to 130, I'm pretty happy making $50 a share. You know, would I like to make 100% and 200%? Of course. But there's still a lot of profit to be made. And like I said, if I hit some measured moves, I'm taking profit. Baidu, same type of thing. You know, all the way back down towards these lows again. Measured move up here towards 160. We're trading at 105. So does it have room to go? Yep. And I hope it's looking a lot better. Speaking of, let me get into Schwab right now. Any golf fans out there? We got the President's Cup going on. The U.S. is out to a commanding lead. So probably more of the same there. U.S. winning the President's Cup, most likely. Not jinxing the international team, but oh my gosh. All right, I'm trying to get into I've got a couple of accounts in Schwab and Thinkorswim that I want to take a look at. This has been a more concentrated portfolio for a family member, and I've been sitting and waiting for these for a while. So let me see. Yep, got it. She knows the deal. Perfect. You live near Wentworth? Never played golf. Never played golf. Lee, what's up with that? Okay, very good. So this account is up from not too bad over the last this year to date. So 30K is the starting point. It's up to 44,235. So it's up what 14,235. So up about 47% this year. Not too bad. And a lot of that is I've been in Amazon, I've been in tech, I've been in Nvidia, I've been in and out of those trading options. Now I'm finally getting the China plays to kick in. So looking a lot better on those investments. And let me go to positions. Looking pretty good. So now I've got about $2,000 running on Alibaba, about another $1,500 running on Baidu. FXI has been ripping to the upside. Some Bitcoin plays ripping the upside. Uranium's ripping to the upside. Amazon's still up a ton, like 10 grand, $9,600. So yeah, whatever. Just taking some good trades and nice to see things coming together. I do think this is a bull trap for what? Bull trap in what? Bull trap in China? So much greed now, mainstream media pumping and soft landing. Well, I don't know, man. I mean, I think you'd be surprised how long this market can keep going. I think that look, we are not seeing a Fed, U.S. stocks. Yeah, I mean it makes sense. I'm not that skeptical of a bull trap. I wouldn't be surprised if we have a pullback. I mean, look at the chart, right? This is a daily chart. If I zoom out and see a weekly chart, there's really no price evidence that suggests that we need to go down. Now, this is from this rip, like this was ridiculous, and this was a crazy shallow pullback. So that like April, April, May, June pullback was super shallow, and then we were saved by Mag 7. Then we got, we really got a taste of volatility there for a second, and we came back up and we still found all-time highs. Now, I wonder if this market going into the election, if we're just not really gaining any ground, and then the election can give us more upside to fuel this move. And I think that could be the push into 6,000. But I would be very cautious and very skeptical of 6,000 plus highs without having some pullback. Because based on this structure, there's support. I mean, any type of top that we see, any type of topping pattern has room to drop 15, 20, 30%. But I think you'd be surprised right now. It's like you've got government spending, you got the Fed cutting rates like freaking crazy. They're likely going to cut rates by another 50 to 100 basis points by Q1 of next year. That for now is very aggressive. And I think the market can still have room in the tank to run with it. They essentially poured gasoline on this. Like, look, there were like ashes and ambers that were kind of, sparking a little bit. And the Fed just came in and, lit it ablaze again. Now, I don't know how much longer that lasts because we don't have the same foundation that we did before. But I still think there's room to run through this seasonality. The election obviously is potentially uncertain. We don't know if it's going to be, dramatic or not. I think as long as we don't have like a big sweep where it's all Democrat wins or all Republican wins, and it's just the election is the election, there's no question of election integrity, there's no freaking drama around the election, I think it's business as usual. And for the seasonality we typically see, if the markets are going to edge higher and melt up higher, great. But China right now has a lot of fuel in it, and I think there's room to run. So I'm going to try to ride these out for the next 3 months, probably into Q1 of next year. And then the U.S. market, if it goes just, even if it puts along a little bit higher, a pullback is fine, but not something crazy. Like I don't see a pullback necessarily breaking structure. But I see a pullback towards recent all-time highs or a pullback even towards like the September Labor Day lows. But that's about it. Again, we're struggling at these highs. We are certainly struggling at the highs. So a little bit of indecision, a little bit of chop. I see it. Monday end of month, Monday end of quarter. Maybe Monday is a weird directional day to the downside. I still hope that I hit that 570 gamma level. It's lighting up right there. To me, this is a magnet for price. I just hope I time it well enough. If I don't, and it's still there next week, I'll take a trade for next week. But if this, dumps today or dumps on Monday, good. That's the trade I'm taking. Okay. All right. And the Dow is still pushing up. So the Dow is up to all-time highs today, I believe, right? So the Dow poked, oh my gosh, it did freaking rip to all-time highs. So the Dow is cranking up around 0.8%. The Russell also still in the chop from the FOMC, but actually up a 1.5%. SPY is flat today. Qs are down today. Interesting, like divergence between what indexes are doing better. So I mean, Dow seems like the easy one because it's pretty much like moat type companies with solid dividends, lots of cash, stable growth. But anyway, so that's it. Anton says SPX500 December market. I mean, we're already at 57.50. You're trying to tell me that they're only going to go up to 5,800? I think 6,000 is in the cards. I don't think 6,000 has to be hit by December, but I think 6,000 by Q1 could be hit. And I would be very aggressive on taking profits, or at least trailing stops, protecting profits. I'm not going to be caught, sitting here buying in these all-time highs. I would be gladly waiting for a pullback or something along those lines. So here's to everybody. I did have a cutoff today at 11 o'clock, so I do have to bounce. But thanks for being with me. I'm glad the stream was fine as usual. Sorry I had a weird blackout there. But here's my plan for the rest of the day. I'm going to be on the road driving, and I'm hoping I can be back for a final hour session at 3 p.m. Eastern time. If I can, I'll be live on my YouTube channel. If I can't, then I will be posting a video in my Telegram, in my Discord, and in YouTube, and in Twitter, and all over the place. So anyway, if I don't do a live session, I'll post at my Discord. But if I can get back for a live session at 3 p.m., I'm live every day at 3 p.m. for a final hour session. Cool. All right, Chandler, Team, thanks. Have a good week, everybody. Look, I hope you had a great week. It was a pretty solid week overall. I'm pretty stoked. 12 of 13 trades winning this week. P&L at fresh all-time highs multiple days this week. No complaints, and hopefully there's more to come. And let's finish this year out with whatever nonsense we get thrown at us. We figure it out, we navigate it, and continue to grind and make some profits. All right. Thanks, everybody. I'll talk to you later. Bye.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.